guess it.
All right, there we go.
We're live.
We're live. Good morning, everyone. Today is Friday, July 11th, 2025. It's now 9 a.m. We're here for a special session of the Hunt County Commissioners Court. This time I'll call the meeting to order. We have Commissioner Hutchins, Monroe, Smith, and Harrison present. I'm Judge Stovall presiding over the meeting. At this time, we'll have public testimony. Speakers are limited to 3 minutes and should conduct themselves in a civil manner. The Commissioners Court cannot take action on items not listed on the agenda in accordance with the Texas Open Meetings Act. Concerns will be addressed by county staff. They may be placed on a future agenda or addressed by some other course of response. Anybody wish to speak? No, you can't. I don't allow my wife to come up here and speak. She'll embarrass me. All right, this time I'll close the public testimony. No old business under new business. We got fiscal year 2025-2026 budget. So, Brittany, if you want to come up and introduce our speaker and say anything that you wish to say before he comes forward.
Oh, we're there? Okay, there we go.
There you go.
And just double checking, are we running on any type of time constraint? I just want to, okay, double checking, thank you. Okay, good morning, and thank you so much for allowing me to come and present my budget request for the next year. I have given you a copy of the request that I presented to Judge Stovall a couple weeks ago, along with a presentation that Mr. Boyer, who will come up in just a second, will present to you regarding one of the requests that I made. I want to give you a little bit of context about my budget request. Other than salaries, the operating budget is pretty nominal. I think a little over $20,000 with operating supplies, training, dues, travel, anything like that. So pretty basic. I tried to base everything off of historical spending, tried to cut out any fluff that may or may not have been needed. So for a little context, I know we have Mr. Smith new in the house here today. And so a little context on that. As of October 1st last year, I took over management and oversight of the accounts payable department, which added 3 members to my staff, which would have increased our staff from 3 to 6. So in the first 6 months of the budget year between October and March, I kind of watched things, monitored things, and noticed if there was any efficiencies or things that could be managed differently. And what I noticed is that I probably had a little too much labor. I had too much time on their hands. Don't want to waste any taxpayer dollars. And so it was a decision that was made and I brought to the court to eliminate a position and merge a position with one of the girls that's currently on staff. So that was done back in April. And since April, we have been doing that with them merging the duties of the previous position and the duties that she already had. It's been working fantastically. We are meeting deadlines. The output is increased. The girls are always working. If you come in, you'll always see the girls are always at their desk working. We don't have any idle time. We don't have any idle hands, which is great. That's what I want to see. I want to make sure that we're optimizing our taxpayer dollars when it comes to our labor, at least in my office here. So with that said, I have in the budget started with 6 positions and will budget for 5. So that realized a cost savings for the next budget year of around $80,000 for salary, fringe, benefits, all attached. And so with that said, and I was like, it kind of got me excited. I like to make changes, positive changes that especially benefit the taxpayer. So got me thinking of other things that I could optimize within the office. And that another thing came with our investment portfolio. Currently, we are invested in local government investment pools only. It is a very safe baseline for our county, very easy to manage. It is liquid. It is making a positive return. We're around 4.2, 4.3 currently right now. and have been. I think the beginning of the budget year, it was just around little under 5, and we're just hovering right below 4.5 right now. So it's been slowly ticking down, but not at a drastic rate. So we're still getting a good return on our money in the investment pools. As long as I've been treasurer, I'm in my 7th year, we have predominantly and primarily been invested in only local government investment pools. I've always wanted to branch out and see what else we can do to kind of mature our portfolio and decide, do we want to invest in more vehicles? Do we want to have more options? Do we want to take a little bit more risk that could possibly allow us more return for our money? And so I met Mr. Boyer with Meter Public Funds at one of my investment conferences, and they also come and sponsor our treasurers conferences. And we discussed if we could find a value and benefit for Hunt County to bring in an investment advisor to help manage our portfolio. And I believe that there is benefit and value there. This is coming, like I said, from me. And doing this daily and seeing that this isn't necessarily just about squeezing out more money from our returns or anything, but about allowing them to help us create a financial stability for the future, for not just investing now, but making smart decisions and smart buys and investments so that we can then set up our planning for the future. I believe that this is a great option. He's going to go over all the details. Currently, I'm requesting the minimum monthly or yearly fee, which is $15,000. Again, remember, I cut my budget by 80, and I'm saving that, so I'm trying to still save the county money, net again, they're trying to close that deficit, do my part to cut out any unnecessary spending. And I think that we can still add that and still have a cost savings there within my department or in that. So I'm asking for the minimum, which is up to 25 million assets under management. Like I said, Mr. Boyle will get into that as he gets into his presentation. But that's my current request. If it is approved and we see that it is working, we can always add more to the portfolio, and he can get into that, and it'll go up just a little bit, as far as like what we have under management. That's what the fee is based off of. So now that my little context speech is done, I'd like to introduce Barry Boyer. He's with Meter Public Funds. He's actually based out of Rockwall, so he drove over here. He said he had a good drive, no traffic, which is great. Don't always get that on I-30. So without further ado, I'll let Barry continue so that you can get a little bit more detail on this request.
Hey, Brittany.
Thank you, Brittany.
Brittany, real quick.
Yes, sir.
I know you go to a lot of conferences and involved in a lot. Is this something that's common across the board with other counties to invest in something like this?
Yes, and everything. It's with this particular firm. I believe that you've got with 2 counties now. I believe with Ellis County and Fort Bend County. Ellis out of Waxahachie, Fort Bend down towards Galveston, are currently they're new to their advisory services, as Meter is kind of a newer firm and everything. So trying to get into the business of counties. But yes, it is common to have an advisor to oversee your portfolio. Yes, sir. Any other questions before I let him talk?
Thank you, Brittany.
Okay, yeah.
Go.
And that's where I have it in there. There's not a line item currently for it. We could add it to my budget, or we could put it under the general administrative budget, Fund 2800, or Fund 10, Department 2800. But there isn't a current line item for it. It would have to be added. Yes. Anything else? Okay. I'm gonna let Barry talk.
All right. Thank you, Ms. Turner. Good morning, everyone. Thank you, Judge Stovall, Ms. Corcoran, Ms. Landrum, members of the court, for the opportunity to be here today. It's very good to see you again. Had the pleasure of meeting with Judge Stovall and Ms. Corcoran back in April to kind of, talk a little bit about this topic, and I'm very excited about the opportunity to come in today and speak with you all. As Ms. Turner said, I'm with Meter Public Funds. I've been working in the public fund space here in Texas for over 20 years. Had the privilege of working with Meter for the past 2.5 years. Is that me? Did I do that? Okay, thank you. As she said, I am based in Rockwall. Been there for 25 plus years, so coming over to Hunt County is definitely not a reach for me. In prior lives, I've worked with the city as well as several others in the area, so very excited to be here. What I'd like to talk to you about today is just kind of give you an overview of Meter and kind of who we are, what we do in the context of public funds here in Texas. Can I get this off without breaking? There we go. Sorry, I got to move around a little bit. I'm just one of those guys. But talk with you a little bit about Meter and who we are, but most importantly, zero in on what we feel like we could add from a value perspective to Hunt County going forward in the future. I'm very fortunate in that, of course, we live on the I-30 corridor here. I've been in Rockwall for many years, and we know the growth's coming. Things are getting bigger. More folks moving in, more taxes, more taxpayers coming in. The base is growing, projects, et cetera. So very much a lot of opportunity in the future, and we'd love to be a part of that here in Hunt County. All right, moving in. Meter itself, we came into Texas 4+ years ago with the acquisition of a smaller firm that was here in this space. But Meter itself's been around since 1974. Been working with public entities since the early 90s. I focus exclusively on public entities here in Texas. That's what I've been doing for over 20+ years. But we focus on the management of operating as well as project funds. It's very much a holistic type approach. We work with cities, counties, school districts, utilities, special districts, higher education all across the state. Fortunately for you, I do not represent the whole of Meter when it comes to taking care of the needs of Hunt County. I am your on-the-ground person here that interacts, manages meetings, the relationship, provides guidance with regards to policy, cash flows, et cetera. But I have a team of individuals behind me that support me from operations perspective as well as reporting all the way down to the trading desk. This is just a quick view here, kind of a beginning to end of the firm overview of the services that we provide. And as we take a little bit deeper look here in a few minutes at Hunt County itself, we'll kind of go through some of these. As I've kind of done some of these on the front end, studying up on the county and some of the value that we can add. But we start with a policy review. From that, we move into cash flow. That's the key to really establishing any type of investment plan for the future. And we've done some of that here in this presentation. That creates the strategy. The real power that we bring that really is going to take the burden off adding a program like this from the staff is the execution of trades. Meter, as a public funds advisor, we manage or advise on over $165 billion in assets just for public funds entities. That's what we do. From a trading perspective, we manage the broker-dealer relationships on behalf of the county, so that when we do trades, we go out and look at numerous brokers across the board, and we come back and provide best price execution because we're able to use our trading power to get that good pricing. So we're able to do that function without having to, have a dedicated staff person that's reaching out to brokers, getting bids, getting prices, trying to figure out, is it a good deal, is it not, et cetera. We manage that process for you and then provide documentation on those trades for the purchases that are made. Then the value going forward from there is going to be your monthly and quarterly reporting. As you know, the county currently has monthly investment reports. You're not required to do monthly, but a lot of counties do. You're required to do it a minimum quarterly by the Public Funds Investment Act, but we actually do both those. We provide consolidated reporting on all of your assets, not just what is invested in securities from a management perspective, but also your pool balances that you currently have in Texpool and Logic, as well as your bank deposits. All those will be on one comprehensive report with income and yield detailed for all of that. Of course, from a compliance perspective, once we have your investment policy in place, we input those parameters into our trading system to ensure that everything is done in compliance with what your parameters are in the policy, from weighted average maturity to maximum maturity to investment type. All of those things are coded in to ensure that you stay in compliance with your policy. Final thing there, banking and custody. We also provide some assistance in that as well. With your banking contract, we can assist with analysis to determine if you're getting your bang for your buck with regards to what you're paying your bank from an account analysis perspective. And then custody, that is something that we can help the county set up as well. At Meter, we're an independent advisor. We're not a broker-dealer. I don't have securities that I can sell you. I'm not a bank, so I can't hold your money either. We're an independent advisor. So we help you set up a custodial relationship, and that's a separate third party that will actually hold the securities of the county in the name of the county. It's not part of your depository. It's not part of Meter. But that's merely a place where we tell the brokers to deliver your security, so it's true independent third-party custody. We can help you set that up.
So really.
Yes, sir.
From an advisor standpoint, you're taking the places of us trying to manage how we buy, when we buy, where we put the money.
Right.
You're just making, so do you do that and drive that, or you do that and present it to Brittany or the court or whoever about what you think we should do?
The latter, actually. This relationship will be set up on what we call a non-discretionary basis. I can't touch your cash and I can't touch your assets. I can't. Now, the way it works is, to your point, we work with Brittany where we come alongside and partner with her to look at her cash flows and then establish a plan for investments. And then we present those investments to her based on our recommendation, and she approves those and tells us to proceed. From there, we take care of the execution, we ensure delivery to the custodian, and then we furthermore reconcile that on a daily basis and monthly basis to ensure everything balances.
So when you provide that monthly report, does it come with any of those activities that would be non-routine?
What do you mean?
Well, just if you had to make an adjustment midstream from what the plan was, is that briefed or provided in the monthly report? Do we see that in the court, or would that just be yours?
It can be added to the report and everything, but currently you're just seeing like balances and yield and everything in the monthly report that I provide.
Okay.
But this is just a look at kind of I'm sorry, did that answer all your question?
No,
there?
that helps me, thank you.
Great. This is just kind of a look at our clients across the state. There's 60-plus clients there. We're continuously adding more clients. And as Brittany said, we're really focused on building out our presence within the counties. I've been very familiar with the County Treasurers Association for a long time in my career and had the privileged to have the opportunity to begin working with some of the counties in this past year. Ellis County is your closest neighbor from a county perspective that I work with. I work with the treasurer down there, Shell Chambers, known her for many, many years. But we also work with, we have a central appraisal district as part of a county down in Travis County down in Austin, and we also work with Collin County Community Colleges. So county in the name, not a county, but higher ed, but definitely a county presence there. But work with several entities here in the North Texas area as well as Central and South Texas. That's kind of the overview of Meter. Were there any questions or anything that I can answer at this point about Meter, experience, myself? I'm happy to do that here before we dive into the specifics about Hunt County. All right. Moving in. First, I'd like to just kind of give a quick frame of reference on where we are in the investment world. As you know, we live in the fixed income space, so it's not quite as exciting as the equity markets, all the things that's been going on here in the past couple months with tariffs. The stock market's up, stock market's down, tariffs are on, tariffs are off. What are we doing this week? Well, in the fixed income world, we do have volatility, but it's not quite like that. But what we do monitor closely, as you well know, is interest rates. And the most impactful thing that we monitor, of course, is what is the Federal Reserve doing? The Federal Reserve meets 8 times a year, at which point they decide to move interest rates up or down. And what we closely monitor is the Fed funds rate, and that's the overnight rate that banks charge each other on excess reserves. The reason that's very impactful for the county is the movement in that rate moves in tandem with your investment pool rates. So as the Fed moves that rate, the rates that you earn on your deposits at your investment pools is going to move right with it. So all that's to say, that's a rate that could potentially change up to 8 times a year, depending on what's going on in the economy and what the Fed thinks they need to do as far as increasing rates or lowering rates. What we have here is a Fed funds rate futures chart that shows what the Fed is expecting to happen by the end of the year. Presently, the Fed funds rate is 4.25 to 4.50. That corresponds to the yields you're currently earning in your investment pools, about 4.2, 4.3%. However, the futures are telling us that by December, that yield is going to drop to 3.80%. So if you're currently invested in pools that have a one-day maturity, your yields are going to correspond to that. Every time that they lower those rates, the county interest income is going to drop as a result of those downward movement in rates. Currently within the portfolio, there's no individual securities that are invested out on the yield curve to secure and lock in longer-term income certainty. So that's where a little bit of that, I'm framing it for our conversation later as we move ahead. But all that's to say, as the Fed cuts rates, the rates of the portfolio are going to go down because currently you're all invested in pools. By the end of the year, you're looking at 3.8%. Well, right now you're at about 4.2%. Again, there's no crystal ball by any means, but we're just going off what we see in the marketplace and what the Fed and talking heads are saying where we could be here in a few months. All right. So the opportunity that presents itself for Hunt County is the opportunity to create longer-term income certainty. This is a graph of that Fed funds rate over the past 20 years and what it's done over time. Of course, going way back to April of 2005, we were at about 5%. And then it declined as we got into a recession that began in 2008, 2009. We were in the dark, cold winter from 2008 to 2015. About 6 years there of being in what we called 0% rate environments. At present, if we were to go down to that type of interest rate right now, the yield on your portfolio would drop to about 0.2% because of the instruments that it's invested in. It would closely follow that rate. But as you can see, that rate trended back up in 2016 as the economy started pulling out. It started getting back up to about 2019, 2020, and we all know what happened there. We woke up in the middle of spring break and realized we had a worldwide pandemic, and the world started shutting down. The NBA canceled their season. That's when we really knew we had a problem. So that had a drastic effect on the economy, as we all well know. So very quickly, as things shut down, the government had to figure out a way to continue to stimulate growth. What do? They drop rates. So that's the reason you see that quick drop in 2019 going into 2020, down into 2021. We were trying to pull out of the pandemic where we basically slowed down the economy. We put the brakes on. So again, another quick drop in rates, unforeseen, didn't know it was coming. But again, being invested in pools, you're subject to that type of decline in rates. So we get to 22 and we start trending back up. As you can see in 2024 up there at the very top, we're at the peak again. We're kind of up there at the top. We've actually come around the corner a little bit. We were up a little over 5% and we've backed off a little bit. Our last rate cut was December of 24. We haven't had any yet this year. There's been talks of 2 to 3 rate cuts. Now we're down to 1 to 2. But really the moral of the story is at some point, as evidenced by this graph, rates are going to go down. So it's a good time to be looking for opportunities to shield the portfolio against that drop in yields. That's where we think we can help. This is just an illustration of the value of a kind of a longer term plan when it comes to your portfolio. The graph on the left is a little busy. Sorry, it's kind of looks a little bit like spaghetti there, but a couple different things there. The LGIP 7-day yield, that's an investment pool yield. That's an investment pool index that would closely mirror the current yields that you're experiencing. And as you can see, once yields go down from 2010 to 2015, that's at the bottom. Where the other yields, which are longer term indexes, a 2-year and a 5-year, those continue to stay high for a longer term. It doesn't reach that bottom. So that kind of shows you the value over time of having investments invested out further that lock in income certainty for the portfolio so that when the Federal Reserve drops rates, you don't instantly experience a drop in income. The value is demonstrated in the graph on the right where you can see over that period of time a 2-year and 5-year approach to investing, which just means you're adding some individual securities in the portfolio. It doesn't mean every single security in there is a 2-year or 5-year. You just extended some of the portfolio and you were opportunistic, created a structure across the yield curve so that you have maturities to reinvest. But that longer term approach resulted in significant interest income earnings anywhere from $3 million to, $13 or $12 million over the long term. So having that more diversified approach by investing across the yield curve will enable you to earn a better rate of interest in the long term. Now, the past couple years, we've been real fortunate in that, for lack of a better term, cash is king. Short-term interest rates have been very high. The yield curve is inverted. You do get paid more for being in overnight funds versus going out and buying a 2-year or 3-year treasury. That's where we are. But we know that's going to change. And we have to prepare the portfolio and be ready for that.
So quick question on.
Yes, sir.
On those charts.
Hold on. Yes.
So both are hypothetical conversations, right?
Yes.
Although the one does reflect the prior slide
Right.
quite well.
Mhm.
But, so if they're hypothetical, so are they hypothetical based on the same assumptions on both charts?
Yeah, that they're hypothetical because we can't show an actual client.
Yeah.
So we're having to show indexes there. And this just simply shows if you take those indexes and trend them out, that's what the income would
So you
look
just
like.
take a basic $50 million. If you take the left chart, apply $50 million to that chart, the right chart's what it would look like.
Right.
So it's all
That's the
same-
income that resulted.
Same assumptions, all right.
Correct. Correct. Now, looking at your current portfolio, this is as of 5/31. Brittany was very gracious in providing me with some historical data, so I was able to really kind of crunch some numbers and really dig into what opportunities lie within the portfolio. So I'm really excited to be able to talk about that. But as you mentioned, currently you're in investment pools. About 89% of the portfolio is in pools between TexPool and Logic, two very well-known established pools here in Texas. I've been familiar with them for many, many years. Very familiar with them, very solid, very good for liquidity funds. So no problems there at all. A little bit in bank deposits, of course, that's just what you got to keep in the bank to pay the bills. But here's where we have some opportunity there. You see across the maturity distribution, everything is in a 1-day investment. It's 1-day maturity, so it's in that 0 to 1 year bucket. So very, very short term. In reviewing the investment policy, I just wanted to real quick kind of go over, that's kind of step one. Anytime we look at a prospect, potential client, we got to start with a policy. That's the blueprint of what we can do from a risk perspective, authorized investments. That's, of course, all under the guises of the Texas Local Government Code, but furthermore, within your policy, that's what governs what we can do. Some of the recommendations that I did see in opportunities was to increase establish the weighted average maturity of the portfolio at 2 years. That doesn't mean we want to look at investments and start sending money out long-term and automatically go to that. But again, create some flexibility and some parameters within the portfolio. Commercial paper is a good option to add. You currently invest in pools that hold commercial paper, and you do get some yield from that. However, there could be additional opportunity in buying commercial paper directly yourself and holding it. That does come with credit research to ensure that you're buying top-tier commercial paper that is credit-worthy and safe and permissible under the Public Funds Act. That's the credit research we do to ensure that we can provide that type of paper to our clients. Add diversification limits. Just put some parameters on, the level of bank deposits or what percentage do you want to have in pools or treasuries or agencies. Add a list of broker-dealers. That's an annual thing that you'll do going forward, should you utilize Meter for this service, is we provide you with a list of broker-dealers that we work with. There's 30 plus on that list, and we evaluate it every quarter to make sure that we're getting top-tier execution and service from those broker-dealers. Again, we're not a broker, so we're not selling you anything, but we work with a vast network of them, and we do all the due diligence on those guys. So that's not an additional thing that the county is going to be required to do is get information from all these different brokers. As your advisor, we are a fiduciary. That's a level above responsibility above a broker. We're an SEC registered investment advisor with a fiduciary responsibility to act in the best interest of our clients. And we take that very seriously as we evaluate investment options and the people that we work with on your behalf. And I guess that's the fifth markdown, additional authorized investment types and maturities to meet the diversification guidelines of the policy. And these would just expand the options available. We're really focused on putting more tools in the box to have options as we move forward as the portfolio continues to grow.
Can I ask a question?
Yes, sir.
This country boy sitting up here, can you explain what commercial paper, what you're talking about?
Absolutely. Commercial paper are short-term unsecured promissory notes that corporations issue to finance their receivables. So rather than waiting on their short-term receivables to come in, they issue this short-term debt to regulate their cash flow. Then as they get their receivables in, they pay that short-term note back. It's a very popular instrument. It only has a max maturity of 1 year. So inside of a year, in this space, it's really about the highest paying thing you could do. It does come with a slight amount of credit risk, but under the guidelines of the Public Funds Investment Act in Texas, you can only buy the really good stuff, AAA rated. So that's something we are fortunate to have in place in Texas. But that's what commercial paper is. It's short-term notes issued by corporations to finance their short-term receivables. You bet. Within, yes,
I
sir.
was just on the first item there where you go from the 1 day to 2 years, kind of
Yeah.
conversation. So what would that distribution look like? Today it's, would it be 20%? Would it be 50%? What would you get into a 2-year
Excellent
window?
question. That'll be in about 2 or 3 slides.
Okay.
We're getting there. We will definitely take a look
So
at
tell me
that.
if this is going to come with it.
Uh-huh.
So because like you say, that's also the account we pay the bills out of, right?
Right.
And so based on that, have you looked at our historical burn model to see what how our cash outlay goes?
I have.
And that would manage, is that going to show?
I have.
Gotcha. Yeah.
We've got cash flows in there. I went back, I forget how many years. It's in there. A lot of bars. I did a lot of Excel work, but it's definitely in there. And I'd be happy to take a look at that. Portfolio opportunities with regards to policy. There is a tremendous opportunity to diversify the portfolio. Your all-in pools and the bank deposits. And actually within your policy itself, the verbiage does state that you need to manage the risk of loss resulting from overconcentration of assets in a specific maturity, issuer, or specific class of investments. Specific maturity, you're investing in pools and bank deposits that have a 1-day maturity. So that, as well as specific issuer, you're in 2 pools. Those are the same class of investments. So there's definitely an opportunity with regards to expanding the options in the portfolio to really bring in more diversity as outlined in your policy. And then the goal being to create longer term income certainty, because as we looked at some point rates are going to go down. And so we want to shield the portfolio as much as we can against that drop in rates to keep income from tapering off as well. All right, here we go. I promise you lots of bars, right, Mr. Smith? Here we go. All right. This is the historical cash flow analysis. Again, Ms. Turner was gracious enough to provide me some monthly reports that I was able to go back and look at these month-end balances over time. And I really just focused on 3 pots of money within your portfolio, those 3 being general fund, capital improvement dollars, and ARPA funds. There is a small percentage of your portfolio across road and bridge and some other various funds, but these were the 3 large ones that I would say 75 or 80% of the portfolio was in. And I spread those out over the past 4 years. And what I did was I broke them out. As you can see, the general is kind of the large light blue portion at the bottom. And then the capital improvement is the dark blue in the middle, and then the ARPA funds are on top, which, of course, ARPA funds are a result of the pandemic, and everyone's trying to figure out what to do with those and how long and parameters and such. But definitely a good portion of the portfolio right now. But we do this as part of our early analysis, to your point, to establish, what are the funds that we might be able to do some additional things with, like invest them out a little bit further, versus what we need to keep liquid to pay the bills. And what we found was, in looking at this analysis, your low point balance of these 3 funds over this period of time was all the way back in November of 21, which we know in the course of your budget cycle, that's right before we start collecting property taxes. So that's generally everyone's low part of the year, whether you're a school district or city or county. But it was November of 21. That low point was $38.6 million. Since that time, you gotten a little bit close to it in October of last year, but that was the low point. In establishing a core, one of the ways we look at that is to take 80% of that low point. So we still leave at least a 20% cash reserve so that we can consider that $38.6 million a potential core portfolio. Now, of course, there's tremendous flexibility in that, but this is just a way that we look at it, and we can fine tune it going forward. But let's assume that Approximately 31 million is that core that you really don't get down to. There's not particular cash flows associated with it. You more or less don't really go below that. So that's a portion of the portfolio that would represent an opportunity to invest out on the yield curve and create income certainty. So there's where the opportunity lies. But as you can see, there's always a cash reserve. You want to be invested, but you obviously cannot invest all of your funds in securities. You've got day-to-day, month-to-month bills, and doggone it, people like getting paid on a pretty regular basis. I don't know about you, but I do. So you have to make sure you have readily available cash each month to pay your operating costs. And we build that in as well. Now, this is a hypothetical. You had mentioned kind of what would that look like from a percentage basis if we were to put that into play. Well, this takes that 30.9 million, the securities line there. That's the portion, that's that 80% of that low point that occurred 4 years ago. And we invest that in securities going out to 3 years. Your current max maturity in your portfolio is 3 years. So this is well within the parameters of your portfolio. The only change to your current policy here would be commercial paper. There's a little bit of that in this portfolio. But other than that, it goes out 3 years. As you can see, there's still a tremendous amount of funds in overnight. Plenty of liquidity there. But just taking that 30.9 million and spreading it out in the 0 to 3 year range, you can see the percentages there. It's about 14%, 14%, and 19%. Now, the beauty of setting up a portfolio like this is over time, as those maturities roll down, the portfolio progressively gets shorter. And that's the conversations that I have with Ms. Turner and her staff to let her know that these maturities are coming up. We talk about how cash flows are looking. Based on that, we make a recommendation to reinvest it 2 years, 3 years, based on what the market's doing. Those are the conversations we have. But all the while ensuring that we've got plenty in that first bucket to continue meeting your ongoing operating needs. Now, as I mentioned, going out and investing on the yield curve, it pays less than pools do right now. It does. That's just the fact. It does. But those rates are going to change. And just to give you an idea, approximately going out 3 years right now, investing in a treasury and agency, you could lock in about 4%. I feel pretty good about locking in 4% for 3 or 4 years because I know pretty certain that investment pools are not going to stay at 4% that long. They're going to go down based on the historical graph that we just looked at. So again, that's that income certainty that you can create within the portfolio. Invest those funds out, lock in those yields so that when rates go down, your pool rates are going to go down. You're always going to have an amount in pools. You will, because you've got to have that function. But other parts of the portfolio, we can lock in those yields so that we ensure that the decrease in income is not as drastic as it could be if everything were in overnight funds. And that's where we're trying to get on a longer term income certainty. Questions on that? Mr. Smith, did I?
Yep, you got it. Thank you.
Okay, good. Just want to make sure. Very good. Now, any questions or thoughts so far to this point? Happy to answer any questions. All right. $1 million question we always get to. What's it going to cost? Unfortunately, I can't work for free. I hate to say that. They just never would go for that. As much as I love doing what I do, and I do. But the cost of services. Our fee structure is what we call an assets under management fee. It's based on the amount of assets in the account. When I say the account, I mean the amount of assets that are in your custody account. This would be that portion that we look to invest in securities. This fee would not apply to your bank deposits or your pool accounts. So it doesn't apply to that.
So if you went back to that last chart, can you show me which ones it applies to?
Correct. I sure can. Right here, it would apply to that just under 31 million that's invested in securities. The 0 to 1 year, it would apply to that portion of the portfolio.
Okay.
But also keep in mind, you determine what goes in there. I can't just decide that, hey, we're going to buy $40 million in securities today. It's not the way it works. It's a non-discretionary account. We only establish what goes in there after a thorough evaluation of your cash flow analysis, of your cash flows, and conversations with Ms. Turner to make sure she's comfortable on where we are from a cash flow perspective. So inside that custody account that's the balance that this fee structure is applied to. Now, there is a minimum fee of $15,000 a year. So that's whatever is in there, the fee will be that at a minimum. Now, on this fee schedule, you're not going to get above the minimum fee until you have at least 15 million in there. So until you build up to more than 15 million in securities, your fee is going to be at the minimum, 15,000 a year. That is an all-inclusive fee. That includes all the services that Meter provides, which are bullet pointed down there at the bottom. From policy review, which kind of already done quite a bit of that, the cash flow analysis as well. I've done a little bit of homework, so I'm thankful to have that done. We're in really good shape. That includes all the portfolio management, the team of my portfolio management group that I work with to help execute the trades and coordinate delivery of those securities. It includes all our meetings. Obviously, on the front end, it tends to be meeting intensive. We got some things to get set up. We'll meet more often than we will probably 2 or 3 years down the road. So I want to get in a nice rhythm up front and getting things set up. Take a look at what the reporting is going to be like. Establish. Most people eventually fall into like a quarterly meeting cycle, whether it's a Teams meeting or in person. As they said, I'm in Rockwell. I mean, pretty much by the time I figure out how to get Teams working, I can be here. So it's a good thing. I do work with Teams a lot, just kidding. But happy to meet in person as frequently as the county needs. I'm there to help any way that I can and very close by. But that is an all-encompassing fee. Again, it's assessed, it's an annual fee. So each month you get 1/12 of that fee assessed is the way it works. But again, pretty competitive. And really, and I tell people this, the fundamental difference between investment pool and this service obviously is, all these bullet points that we provide as an advisor. We do require an agreement where a pool is just, it's an account, you put money in, you earn a rate of interest, et cetera. Pools charge fees too. They don't work for free either. However, they don't have to provide you a bill. Virtually every pool in this state charges anywhere from 10 to 6 basis points. It's just that they take that right off the top, and then the yield is netted to you. But with pools, you don't get all these other services. They don't help you create income certainty or do cash flow or policy analysis year to year or provide you a broker-dealer list and the due diligence with it. I think that's all I got. Final slide. Why Meter? Why would you choose Meter? I feel like we have the experience to take very good care of you. Meter Public Funds, the name says it. That's what we do. I've been working in this space in the state of Texas since 2000. It's what I do. I like it. Hopefully you can tell that. My accent wouldn't play any other states. They don't let me go anywhere. I'm an East Texas guy. I grew up in Mount Vernon. That's where I'm from. Very holistic approach. Again, we look at your project funds, your operating funds. We want to ensure that you're in compliance with state code when the legislature meets every 2 years and starts throwing around bills that could affect your investment policy parameters. We monitor all that. If that gets changed, we make the updates for you. We make sure that you're in compliance with your own policy as well as state code. Overall goal that I'm seeking to be is your trusted advisor. I want to be here to benefit the citizens of Hunt County by providing you with a comprehensive investment program so that as you continue to grow, projects come, cash flows go up and down. We can help create some longer-term income certainty in the portfolio, put some more tools in the box, and come alongside your current staff. We cannot replace anybody. We cannot. We can come alongside and expand upon what you're currently doing and add some value to the portfolio. That's our goal. But that's really all I've got. Is there any other questions or anything that I can address?
One question. and
Yes, sir.
Hopefully it's appropriate. So Brittany's going along, her collections are down. we just had a catastrophic event in a building, you know, something that's gonna require cash outlay.
Sure.
And all of a sudden, she doesn't have enough cash on hand.
Right.
She has to go dip into it. What's the penalties or things associated with that? And I know it's.
Sure. No, that's an excellent question. An absolutely relevant, excellent question. Thank you. First off, when as we mentioned, we build in cash reserve. So you're never going to be invested all the way up. You're going to have plenty of liquidity, at least 20%. Most people, 30 to 40%. Now, if that's gone and we need to raise money, we look at your portfolio. All your securities aren't going to be out 2, 3, 4, 5 years. They're rolling down. You're going to have steady maturities monthly, at least quarterly, coming into the portfolio. So there's not a set penalty or anything like that. It's a matter of going out into the market and selling that security. So let's say we have to do that. As securities move closer to maturity, they're closer to their face value, their maturity value. So there's much less of a change versus what you paid for it. But fixed income securities move opposite of interest rates. As interest rates go up, the value of the securities you hold goes down, and vice versa. As interest rates go down, the value of the securities you hold goes up. And that's shown each month on your reports. But the beauty of fixed income investing is that maturity, you get the face value back. You've earned all your interest and you get your face value back. But in the event that you have to sell prior to maturity, depends on what's happened with interest rates since you purchased that securities. So let's say, for instance, we set up your portfolio next couple months. And we get a year in and we need to come up with, pick a number, $4 million, $5 million, raise some money. We got to add some cash. So we're going to look at that portfolio and figure out how to liquidate some securities where you're not going to have to take a gain or a loss, because it's all determined by how interest rates have moved, which obviously we can't control. But it does happen. And I've actually had real life example. This past week, I had a city that I work with that. They said, hey, we need to, we're coming around to budget season. We got some things looking at next year. We need to raise some cash from our portfolio. Okay, great. And we did the analysis. And we're able to create $12 million worth of liquidity without taking any sort of loss whatsoever on book value. So, but yeah, to your point, there's not a set penalty. It's you have to go back out in the market and see if you can what you can sell that security for. But again, that's all we do all that measuring for you. We're not going to go out and sell something you're not going to know exactly what you're getting first. Yep, we have those conversations.
Obviously, y'all are contractual, so is this typically a 1 year, 2 year, multi-year service that you submit for?
That's totally up to you. The Public Funds Investment Act itself says that the first term has to be 2 years, and then it's just renewable annually. I'm not a big fan of placing terms, because at the end of the day, every contract comes with a 30-day out clause, and the only reason you're going to continue working with Meter is if you're pleased with the services you're getting. That's it. So, but legally, the Public Funds Act says the first term's got to be 2 years. After that, it automatically annually renews. So,
How soon do you think that you can that we can get a return on the $15,000 to you that we could see back into our accounts?
well, there'll be interest earned monthly. I mean, we'll set up the portfolio and start earning interest monthly. The beauty of working in the investments in the public fund sector is the investment portfolios where they have the opportunity to make income without assessing taxes or fees, and it's great. And fortunately, you're always able to earn enough interest that more than covers the fees. So let's say, for instance, we set up a portfolio. Your portfolio is yielding 4.2%, 4.20. Let's just pick a number. Our fee would be 0.1. Again, we have to show you our fee and disclose it, because that's the way investment advisors work. But again, it would more than pay for itself, and then some. Otherwise, we wouldn't be here.
So just so I'm understanding.
Sure.
So you're basically just going to be our advisor,
Mhm.
and then you would make recommendations to buy to move money around or whatever, and it would still have to be approved by Ms. Turner?
That
or
is
by the
100%
board?
correct. You
Okay.
got it.
So basically, we're still controlling what assets we want to purchase.
That is correct.
Can I answer just a little bit to that? And also, David, per our policy, the investment officers for our county are myself, Judge Stovall, and the county auditor, Mary. So any of these decisions that we would be making would be between the three of us. So if anything needed to come before the court also, but it would always come between these three as well. Before anything, it would go before that.
Okay, that's what I thought, but just making sure.
Yep, excellent question.
Thank you.
Anybody else?
Anybody else?
I had wrote down a couple of questions along
Sure.
the way, but you were pretty thorough and answered them, so.
Oh,
I
well, thank you
appreciate that.
very much. I appreciate
I
that.
do have a question, but it's probably for Brittany,
Okay.
actually. Brittany, do we need to go out for any kind of RFQ if we're gonna go down this path, or are we good just? to
I don't
just
believe
seek out?
so. I don't believe that is a process. I might let him answer that one as well.
All right.
You're not required to. Some people do, but you're not required to. And even a lot of people just either engage directly without doing that, or you can, it's considered a professional service. So you really don't have to.
Got you.
So. Right.
Yep.
And-
Daniel, you agree with that?
I do. It's under Government Code 2254 and 254, and it doesn't have to go for RFQ or RFP.
Is it because it's professional services?
It is.
Yep,
Thank you, that answers that question.
Yeah, thanks.
very good.
Anything else? Thank you very much.
Well, thank you. I can't tell you how grateful I am to come and talk with you today. And by all means, if there's any questions that you think of after this meeting, do not hesitate to reach out. Always here to help. But I appreciate the opportunity, and very excited about the potential of working with you. Looking forward to it. Thank you.
Thank you.
Thank you.
All right. We're good? Yep, there you go. All right. All right, commissioners. Before I start, has anybody got anything they want to talk about first, or? All right. We've heard from various departments, the sheriffs, district attorneys, Homeland, JPs, and we talked last meeting about going ahead and getting the spreadsheets filled out and start getting everything in. And some of these are pretty big ask. So is it okay that we leave out the requests now for added positions or bigger raises until we get to the closer to getting it finalized, but we can get a spreadsheet going that we can play with some numbers and see where we're at? Because some of these asks are going to be pretty high. Some of them are pretty low, like Kerry Cruz, JP, is that 2, I think? Theirs is pretty much a wash. They're just changing part-time help to full-time help and changing what department it's being paid out of, pretty much. So it's not much. So I think we can do that. Homeland, we might want to discuss those. That's not a real big one. If y'all want to discuss it here, they're asking to go up to the same pay as the sheriff's pay with basically the same titles. If you want us to go ahead and add those in, we can, or we can leave them out and look at towards the end. I just need some feedback on how. For me, it's the less we add into it until we get our totals of what we got to have. I think to me it'd be easier to look at to say, here's what we got to have, here's where we're at, now can we add anything rather than try to go in there and start trying to figure out where we're gonna take stuff from? So does anybody have a preference, or is,
So you're talking about doing a presentation where, we get rid of the deficit, just across the board, no big changes in anybody's budget?
well, what I'm talking about is, let's get in what everybody's just normal requests are and get that into the spread, which we almost have, along with some adjustments I'm recommending. So we'll have that in there, and I'd like for us today to go ahead and pick a number for potential raises, whether it's 1%, 2%, 3%, whatever it is, so we can go ahead and put that in, so that gets us to a start point. And then with Mary's spreadsheet and all, it'll be real easy to change. If we want to change it from a 3% raise to a 2% raise, it's just to hit the button and we can get instant numbers. But if we have a lot of different departments and we start trying to say, well, we got to bring it down, so let's go take the sheriff's guys away from him or the raises away from somebody, to start trying to weed it down, to me, it makes more sense to try to get to where we are and then see what we can add back in, if that makes sense. Has anybody got a preference, or?
On the Homeland deal, I'm not for raising their pay up to meet the sheriff's department. I don't feel it's comparing apples or apples. That's my opinion.
Well, and that's fine. We can have that discussion, because we're going to leave it, there's the way, I'm not going to do any adding of raises requested other than like JP2, because we're making those adjustments and it's no money there. There's not much of a money change. It's just changing people from one side to the other. But, the DA's got two positions, and then moving the money from the SB 22 to the Fund 10, which is a major change. Sheriff had a request for 5. The jail is requesting that they do away with a detention officer and promote a detention officer and create a position of sergeant, I think it is. Buddy, is that right? Yeah, and it's a $10,000 change or something, $10,000 or $15,000 change. So it's not a huge number there. Those small ones like that, I'll probably put in there. We can highlight it or something showing that we made the change.
Yeah, that's what I'd say. If we want to do it, where if there is any kind of an increase, what you're talking about, the sheriff's office or JP, if we can highlight that increase so we can see it, then we can work from there.
Right, but the big ones, I'm just going to leave out for now
Yeah.
until
You
we
just
get
want the baseline, for the
baseline.
most part, like last year, as far as salaries, with the exception of 1 or 2 that you think ought to be highlighted.
Right. And then
no
pick a
fees or
number
anything
of,
like that.
do y'all want to see a 3% raise to start with for employees and see what that looks like? So we can get that in, so that way, probably in the next week or so, I know we got 2 out next week, but 2 commissioners, I know Steve's out most of the week. Are you back Friday, or are you there all week?
I'd have to look at the schedule again.
Okay. And
I
you're,
think we're
David,
back
you
Friday.
gone Monday and Tuesday or something?
Yeah, I think, yeah.
So let me know, maybe if everybody's available next Friday, maybe we can call a special session next Friday to kind of get an update of what we get done between now and then. And I hope we only like 3 or 4 departments, Bernice, getting everything in that's been requested. Is that right? Yeah. So we should have pretty much all the requests in, and then we still have to work with our revenue and a few other the funds to kind of get it wrapped up. But we're hopefully getting it real close to getting to where we can start looking at it. Of course, I talked to Brent South. Did I tell you all that? I talked to Brent South, and I think he's saying that we should have our certified roll around the 24th or 5th or something like that, I think. He said their last hearing is the 16th, which is like a Wednesday, and he said they'd need some days to go in there and clean up the records and all before they could get to a number. So whatever the 16th was of July, which I guess that's one day next week, so sometime within a week or so, 10 days, he said we should get our our notice of what our actual certified tax roll will be. So then we can start looking at revenue with our tax rates, and hopefully tax office can get us our tax calculations for what our rates can be. So is everybody all right with everything I've said so far? How we're looking at it?
I'm good with that. We need to start getting,
We need to start getting some
total
totals.
numbers
Yeah.
back so we can start,
I think it's a lot easier to
work
try to add, go
backwards.
back and add than it is try to
So
go
do
back
we
and try
need
to
to
take away.
tentatively agree on a start point percentage for raises then, so Sandy can start
It would
that?
be nice if, if we get a consensus of what we'd like to shoot for at least. I didn't
what
hear
this
all of
is?
that.
I said so I could do one spreadsheet instead of the 8 I just gave you.
Oh, okay. Well, but we can put it into our total budget package is what I was looking at.
Yeah.
Yeah,
I mean, once I get them all in there, then I keep them to Bernice and she can add them.
right.
I just need to know the percentage and then which of all of this to put in, to make sure I'm doing it correctly.
Correct.
My only caution, Judge, with choosing a number, which I think we need to do, but I would caution employees watching, this is a tentative number.
Right.
We're trying to get this information collected. so
Kind of
we
the
don't-
number we're shooting for and we'd like to do.
Right, and so it may change when we
It
get
may
all
change,
other
it may go
numbers in.
down, but what we're
So-
shooting for. Okay.
When do you expect all the expenditures to be put into Encode so we can start to look at the whole, all of the expenses and the labor? I mean, the labor, Sandy's already got a really good start on that.
Right.
I just,
Well, the expenses, we only like 3 departments.
but when will they be all in Encode? For sure, before August 15th.
I mean, well, no, it'll be quicker than that. I mean, the proposed right now would be, you only like 3 departments, that'd be done next week. Yeah, we'll have all those in Encode by next week.
I mean, I can't do my big spreadsheet.
Right.
Until I see all the information.
Like I said, we got, all of the departments are entered with the requested budget and what I'm recommending. So we got the requested and the proposed in for everything but 3 or 4 of the departments.
So,
And
Mary,
they're the big ones. They're the IT and the sheriffs and one other that, facilities, yeah, the bigger ones. That's the ones I'm still trying to get my arms around.
so Mary, are you asking because you're wanting to get the freshest download out of Encode into your tool that you can?
It's a good analysis, but without all the data in it, it's not a true story.
Right.
So the sooner I can get that, go over with different people to make sure that what's in there is correct, it matches. And right now, I'm just, every time I go into Enco, I pull that stuff over, but there's still a lot of information missing.
So if we have any struggles, though, we could use your current tool and identify what's missing, or, and we could even round a number, that's $1 million that's missing, or $100,000 that's missing.
Sure.
We could do that, or we could manually force it into your tool, right?
If I don't have data, I can pull over last year's budget, just to get a picture, and then as data, true data comes in, it's replaced with those expenditures.
Well, except, I mean, only caveat, I mean, it doesn't do us, I mean, and we're gonna get that as fast as we can, but really, we can't start doing any analysis until we know our revenue, and we don't know our revenue till almost August 1st. So, I mean, we'll be ready time August 1st gets,
No,
or time we get to the appraisal district's numbers, which are pretty important, and then our tax consultants, they're gonna give us a projection. Did they, like, next month or so?
Now, we still have to enter in pages of revenue, so there's
Yep.
another, we've got to enter all the.
Right, right.
So there's a bunch of data entry,
Labor,
labor,
I thought labor just imported through her spreadsheet.
they will be, but they're not there
Okay, yeah, but that's not a long period of time to do that. It's just, not days, it's just hit a button and it transfers over, yeah, okay. All right, Bernice, am I missing anything? Commissioners, I think, were y'all gonna do a presentation today
No,
or
we
later?
need to talk about the road crew real quick while they're here.
Okay,
That's kind of what we also wanted.
and
to
were y'all
talk
gonna
about
make your
today.
presentation today or later?
I was gonna make mine today, but we can talk about road crews. stuff.
Okay,
Yeah, Joe's here, and then we got Mark Bussell here as well to kind of talk about it. You know, one thing that I was kind of thinking of with the road crew is maybe we try, you know, a 4 months circle of having them go to each precinct in the morning time, starting there at that precinct that they're working, and kind of work that away. I think that'll help out as well. That'll give more direct contact with the commissioner and foreman to the road crew. So I think the communication will be better that way. One thing that David and I was talking about yesterday also that would help everybody out is with their, and I've got a copy of their budget if y'all want to see it, but maybe even taking some of their line items away, which like the fuel, and dividing that up 4 ways in the 4 precincts. That would save them from having to get fuel at one location and keeping up with it. They're in that precinct, they use that precinct's fuel and log it down, obviously, and then any other materials, grease, def, anything like that. That way they're truly in that precinct and working the way that precinct wants done. I don't think we have time right now to try to sell equipment and go out and buy a tractor and shredder and replace all that stuff. I think that's something we need to start looking into maybe next year if that's what everybody's wanting to do. But at the same time, if you do have a tractor or shredder while they're in your precinct, obviously they work for you as a commissioner. If you need them to do other things over there during that time instead of dig ditches because it's been raining, then that's your discretion. You just need to pass it on to Joe and his team. That's kind of what I'm thinking right this second.
But in that scenario, the precinct would have to have the equipment to support them.
Yes, sir.
Yeah.
Yes, sir.
It wouldn't be bringing from anywhere else.
Not yet.
Yep.
David, what else you want to add? What have I missed?
I think that's about it. Just the main thing. I don't think we just need to do away with it. I think we need to try to critique it a little bit. And I think this would be a good start of having them check in at the precinct where they're working. Because like I said the other day, at best, we're getting 6 hours a day work time going to Commerce and then back to the other precincts. So I think we need to try it this way and then put it maybe on a 4-month trial starting next month or whatever, and we come back in 4 months, evaluate it, and say, hey, what's working? Did these changes help? Is there more changes we need to make to it, or go from there?
so for the rest of this budget year, they would continue to do the gas and expenses out of that budget, and then starting October 1, then it would go over to the independent precincts would cover those expenses.
That's what I'm thinking. I don't think we can do away with it right now.
Right.
The line items.
I was just thinking
or
about the
amount.
transition,
But that's-
since we're
that's
starting a
kinda-
4-month here
Yeah.
in the middle of
Yeah.
2 years, 2
Right.
budget years, so.
And then split up there. I mean, obviously, they're still gonna have some maintenance stuff that they're gonna have to, be able to take care of. I don't think it's right if they're in Mark's precinct and the truck blows up, it's not right for him to have to pay for the repair out of that, his budget alone. So there's gonna be some things like that's gonna be shored up. But as far as like the fuel, the everyday use type stuff, fuel, grease, def, stuff like that, if they're in that precinct, they ought to be able to just go in there and get it from that precinct. Time sheets, same thing, which will save Joe from having to go to the courthouse once a week, twice a week. He can turn it into that foreman or commissioner, however y'all want it done in your precinct, whether y'all want him to deal directly with y'all or the foreman. But he can turn in his receipts, anything like that to you all, the time sheets, and then y'all can bring them up here to the courthouse, and that'll give him more time to stay out in the field and work.
Steve, I'd be happy to give that a try. I think it would be good to have them check in directly to the barn. That's the biggest thing, and due to no fault of their own, because they've been doing what we've asked, we need to switch from that. So I appreciate David bringing that up. And I agree that adding in the future, splitting the fuel just to the precincts and then just fueling there makes a lot of sense as far as regular maintenance things, even if it's regular stuff you consume a lot with the DEF, the grease and stuff. If it makes more sense to just fund that through the precincts, no problem. I don't want to tie their hands on that stuff at all. But I know we've always had a good working relationship. It's been easy. We've been able to get along real well with them, worked real well with them. So I don't anticipate any issues on that front.
Joe, Mark, either one of you guys want to add anything to this?
I think it'll be a great thing. I think it'll take a lot of burden lines away from everybody. The only thing I worry is.
Come on up front. Come on up front.
You're gonna say more than yes, you gotta come to the mic.
I promised Bustle he
It's like
wouldn't
you
have to
said,
speak.
There's some things that we'll have to figure out, like I asked Steve yesterday, if my guys needed to call in, well, they'd call me and I relay it. But if I need it off, who do I report to? Do I call the commissioner? Do I call the foreman? Because it's about to be time after summer where I go showing. But that was that. The timesheet thing, which I know we can figure that out. And the other thing I thought about was, right now, all my equipment services is in March. That's just where the hours and miles and all fall. Well, that would fall every year in precinct 4.
They won't care about that.
Yeah.
Well, I know, but
I don't see a
Thank you.
problem.
I'm just
Thank
saying,
you.
other than that, I think it'll take a lot of blurry lines away and give us a direct line to stay on to make it all better. Because, we're willing to help do anything, just point us in the direction, we'll do it.
So one thing, so I think this is all good. It's a step. We're taking a step as opposed to a leap. That's fine. Sometimes steps are better than jumps. But the one thing that I've heard a lot of conversations about is making sure that we're clear with expectations. When you come in,
Yes, sir.
what's the job, right?
Yes, sir.
Is it this work order, or is it we expect when you do this work order that you're looking, to the left and right of you?
Normally I do.
Yeah, we need to make sure that we're clear about expectations of what we're wanting done and what the end product looks like. And, oh, by the way, yeah, I told you to do this, but the problem's really over there. And make sure you have the latitude to go do those things, so that everybody agrees that we want you to have that latitude.
Yes, sir.
Well, and I think also, you guys as commissioners need to make sure Joe knows who he needs to communicate with. Is it with you guys day in and day out, or is it with your foremans day in and day out?
Well, unfortunately, Jason's out today. He's out of town, but I would, since Jason's managing the work and scheduling the work, I think that's where
Yes, sir.
the communication should be.
I agree. We just
For
didn't
me,
want to
for
step
me.
on any toes and
I agree.
cut a commissioner out if you want to be involved and make the decisions for it. But as we all know, we're not always around the barn, and our foremans generally know 10 times more of what's going on than what we do. But again, that's just the direction that Joe needs to be given, is what do you expect when he's in your precinct? And generally the way it's supposed to have been is, a week, give or take, before they move to a precinct, Joe is supposed to reach out to, again, a commissioner foreman and find out what work needs to be done. If it's up to y'all, if y'all want to have on the very first day he moves to your precinct of you 3, 4, whatever, sit down and have a conversation with him and truly take him out and show him what you want done, then again, that's up to y'all. But communication, I think, has been a little bit lacking in the direction that we want him to go. And I think that's what we're trying to iron out today.
Normally, Gary, I give a 2-week call out. And Jason, if I was on vacation and I forgot to call on the right day, he'll call me on Monday morning.
Yeah.
We'll know where his call was. But I call 2 weeks out. That way I know kind of in the area he's going to send me.
Yeah. I can tell you, Jason enjoys you coming over.
I know he does.
And so we're very thankful for it. Matter of fact, if you guys feel like you need to forfeit your time, by all means.
Jason
I
will
have
take
the
you.
last 2 times. Thank you.
You can put us on that list too. Come on over. Yeah,
You've got some at one time.
yeah, we've always had good communication from you about 2 weeks out,
Yes,
like you say, and so that's worked well for us. You communicate with my foreman. It's going to continue that way. That's worked well on our end. We won't be changing that.
And I think going forward, after we get through this budget year, I think we're all on the same page that we talked about the shredding. If that's something we want to look into, then we start pretty soon on looking into getting tractors, shredders, or something like that, if that's what we're wanting them to do. But also, they gotta have some direction if they're in your precinct, and it's raining or muddy or bad weather, whatever it is, of what you want these guys to do too. So, again, just communication. I think we can clear this up and continue getting the service from them. I don't know about the budget stuff, what all needs to be done to make that all
I'll look
happen.
at it and see. Think about it.
They'll still need some money for repair and maintenance and stuff like that in the line item, but, other than that, should be good.
Okay.
So we're clear, we were starting next month, or we gonna start in October?
No, we're starting next month.
Okay.
Next month. When you're leaving, you're in my precinct now, you're going to Gary next. So Gary's gonna be the first victim.
And so next, that's good. So, but we're marrying it now. It's ditch crew, it could be mowing, it's whatever the need is, right?
Whatever your need is in your precinct. And then whatever time you go to, I think y'all work 7:30 to 3:30 or 7 to 3:30. So they will show up at your barn at that time and clock in at your location and then go where you send them to go to.
Okay.
I think Joe may have been asking about like on the fuel, because we can't change any of that until October, or where they meet and stuff like that. That may have been what he was talking about.
Well, and Stacy may, on the fuel side of it, I mean, if they still go to each precinct and just log down that that they're getting fuel out of their tank, is that gonna be?
Have to correlate it with the foremans for sure.
Okay,
Yeah.
But they still have a fuel budget till the end of September.
correct, yeah.
How we do it at Ford, I use blue ink, so Corey don't let nobody write on their fuel sheet, but in black. That way when he scans anything in blue, he knows it's mine. So I mean, we could do the same in all four until the new budget starts over. Which I mean, it'd just be Gary, so it'd be,
Yeah, it's no big.
Yeah, I don't think it's in
I
the
could
world.
do, I could sign
Yeah.
all my fuel in blue.
And then any receipts or anything like that that you do during the month that you're in Gary's, and obviously turn them into Jason, and your time sheets, anything like that, that way you're not having to spend time up here at the courthouse, you're out in the field working.
Makes a lot of sense.
Easy
So,
enough.
so the one question I've got, and if I'm off the topic, then somebody just tell me, but, so, I appreciate what we're doing as far as how we're gonna execute, make some change there, that makes sense. I understand that the mowing piece today, because, I mean, the reality is we don't have enough equipment anywhere to do anything, or money to go do that with. So, I understand that's gotta be into a next plan somewhere. So, but I think we did all say that, but we do have a problem right now, right? A 60-day, 90-day problem mowing. And I know there's not money to go just buy another, equipment. And we were talking about how challenging it is to try and lease or rent something from somebody. Do we have the ability to very quickly go out and try and get farmers, ranchers to help shred for us as a service? Is that something we do? This is a new guy asking questions. If I wanted to go get, three ranchers to help mow for 60 days, can I do that? Is that something we can do?
You can do that if you want.
Yeah, the commissioners have a pretty wide latitude to do things like that, volunteer-based. If you're gonna pay people, it gets a lot more complicated.
Yeah, and I'd probably have to pay just with fuel costs, right? Nothing else, but yeah.
Potentially, yeah. I mean, you can work with people who are adjacent to, or whose land is adjacent to county roads, if they want to, volunteer to maintain some of that. But you're taking on some liability when you do that, in case somebody gets hurt out there and they say, well, the commissioner told me that I could do it or I should do it. If you pay them, that's not something that you can just decide to do in the middle of the year, really. You'd have to plan that out as part of the budget, and it would have that sort of thing is definitely not covered by our current insurance policies. And so to the extent that there was a plan to do something like that, we would need to get additional coverage, or at least a review by the risk pool to determine where the holes are in our current coverage.
Is that something that whenever we're planning into next year, that we can put it in there as an option that we might use if needed? I don't have to use it, but I make it part of the plan if needed?
You can. The problem is that you, in the way that counties are set up, you have to plan for employees in a very specific way. And that generally isn't changeable in the middle of the budget year, absent some specific circumstances, which probably aren't going to apply to that issue. And so you can plan for it, you just can't, it's not as easy as it is for a private business to add temporary employees in the middle of the year.
Yeah, so it's a yes, but.
It's a yes, but.
Yeah.
Yeah.
Yeah, all right. Thank you.
We all good? Bustle, I know you really want to get up here and do some kind of talking. You sure? Not really?
Have an answer or
Okay.
something?
We're all clear? We're good? Thank y'all.
Thank you.
All right. Mark, you want to present your budget,
Sure.
or Steve, you doing yours today or later, or?
Probably later.
Okay.
Thank you, Judge. I guess I could do this from my chair, but Gary stood here, so I feel like, it's only fair that I do so as well.
Well, I just felt like I was under y'all's microscope as the new guy, so y'all get the lead now.
Well, we got to get down here every now and again to know how it feels. Well, thank y'all for letting me present this to you. It's I don't think it'll take very long, and for the most part, I think is fairly self-explanatory. But I want to be able to give y'all an opportunity altogether to ask me any questions if you'd like. Let me go ahead and handle the clicker. So the first thing, and I won't spend a lot of time on this, but I took time over the last year to work a little bit on developing a mission and vision and goals that are a little bit broad, but can use to help guide our decisions and resource allocation in the future, and just to help establish the mindset we want to have as we provide services to the people in our precinct. So we view ourselves as service providers. That is indeed what we are. So we want to make sure that we are guided by commitment to maintaining the quality of life, supporting, encouraging healthy growth as our county's going through that at significant levels, and safe communities. With the road and bridge departments, we are asking people to rely on the work that we do, oftentimes to get home, get to work, get their kids to school safely and with minimal interruptions. So we're always very mindful of that, and we wish to provide those services in a manner that's consistent with our mission. It's also our mission to promote fiscal health and low taxes through efficiency, focus, and future planning. We talk about that a lot in our budget process. Gary spoke about that as well when he presented his budget. I've got to pause and thank Gary. He made this job easy for me because I said, "Hey, Gary, could you send me that PowerPoint and I'll just make some changes to it?" And he said, "Sure." So thank you, Gary, for
It's called
your
plagiarism
cooperation on
or
that.
something, isn't it?
I'm sorry, what?
They call it plagiarism.
It's appreciated and saved me some time on it as well. So we want to promote the fiscal health and taxes by efficiency, focus, and future planning. And that means that every time we put together a budget for our precinct, and we together at the county level are always considering and planning for the impact on future budgets as well. So this budget is not prepared in a vacuum. It's been prepared based on the work we've done in future budgets, and it's prepared based on our expectations and goals prepared based on past budgets and with a focus on future budgets as well. So our goals are to ensure the wise and prudent use of our resources, provide proactive maintenance, rehabilitation to existing county roads, seek new ways to promote future cost savings in all services, prioritize improvement of road surfaces throughout the precinct when feasible, and invest in workforce development and a growth mindset for all employees. I've also included my 2025 annual road report. It will be submitted, as we've done in the past, also through court and filed with the county clerk's office, but I've included it in this for reference. Not a lot to note in this. Couple things I would draw out, though, is there in the first upper part there, section A, but concerning culverts. One of the big challenges we face is unpermitted culverts in the county. A lot of them are very, very old. They've been there a long time, and some of them are new too, new developments. So we try and keep up on that as best we can, but it does present a lot of challenges. Unpermitted culverts are usually too short. They're often too small. They don't carry enough water, so it causes drainage issues. Being too short means that they often get crushed easily, quickly, and that causes drainage issues as well. So that's a challenge we have. I don't have a great solution to suggest other than paying as close attention to it, but in the future as we grow, it might be something where we need to look at a position in, say, development or something that helps us monitor more closely current and even past construction standards so that we can enforce them as best as possible.
Mark,
That's just-
and this is just from a learning for
Sure,
me.
go ahead.
So when you see those things, because I have starting to see a lot of the same things, do we pull them up? Do we dig them up? Do we tell the people they have to replace them, or are you just talking about how to go deal with it in the future?
Mostly how to deal with it in the future. Dealing with the current situation varies a lot, and that's based on the challenges that's presenting. We try and work with landowners to get them swapped out and replaced, because otherwise they can create a lot of problems with the drainage and such that then creates the cost that gets passed on to other taxpayers. And so we're trying to keep that impact down, and so that's the challenge.
Thank you. Still learning that one.
Yeah,
so.
no, that's okay. We're still learning it too. Then there, the very last sentence of at the bottom of the page, it's not going to shock anybody, but new development and the traffic that comes with it is the biggest challenge we face with road construction. Vehicle types, vehicle sizes, a lot of farm equipment these days are getting enormous. I saw some sort of grain combine going down 69 the other day. It's taking up a whole lane and a shoulder heading north. And I'm not upset about that. The farmers need to make a living, but it does present a challenge for us. And it does create a lot of additional repair and maintenance needs. And I'll talk about that a little bit more. But right-of-way maintenance generally and reclamation is something I hope to mention a couple times through this, and is a big challenge for us. I'm sorry, there's a typo right off the bat there. I told Brittany, don't staple this until the last minute because I might find something I need to fix. And then she stapled it, I found two things immediately. So she's waited till the last minute like I asked, so she did right. But for the 2025-2026 requested budget, I am requesting an approximate increase of 4.75% in expenditures, with my emphasis being on road and bridge repairs and improvements, replacing old equipment, primarily our rock hauling trucks that get a lot of use, and so they tend to wear out, and of course increasing our right-of-way maintenance and reclamation as well. 5-year capital plan is to continue to upgrade surface types as able. Primarily, that's a financial question. Improve our truck fleet quality. We take a quality over quantity approach here whenever we can. And then facilitate expansion of our facility expansion and improvement. And by that, our current barn is meeting our needs pretty well. There was probably some minor maintenance that needs to be done to it. But with the size of the precinct, since we store most of our materials in Celeste and we have another yard, really we almost get to use for free in Wolf City, that means that most of our materials are stored in the northern third of my precinct. And so that creates some inefficiencies when it comes to hauling, getting it down to the southern part, down, south of 380. My precinct hops 380 down to 3211 is my southern boundary line. County Road 2720 and FM 3211. So there's some inefficiencies sometimes getting materials there that could be remedied by potential additional facility down there. I have one in mind. I've actually spoken with Daniel Ray about it. So we're working to see if that can be used for county purposes. The one I have in mind wouldn't require purchasing, but there's some title questions associated with that. But we might be able to take in a couple acres and fence it in and use it for material storage. 5-year plan for road improvement and maintenance would be to develop a road condition scoring system. This is something we've worked on in the past. I've looked into, and I have some potential vendors and products in mind, but I'm continuing to research that. And that will just be for the purpose of collecting data in a systemic way that we'll be able to use in future to look back and make sure that every road is being evaluated in the same way. And that's primarily to anticipation of the continuing expansion of the road system itself, potential crew expansions. And I know we've talked, and Commissioner Smith brought up that we needed to consider, and I agree, consider whether the current precinct system is the best, works best for our needs, or we need to move to a different system. This would help us to be collecting data that would be very valuable if a new system were to be established, to input it into that and be able to plug and go. So also continuing to develop a right-of-way reclamation and maintenance program. I say it that way because we currently maintain our right-of-way primarily through mowing and drainage and all that. But we have a number of very narrow county roads, and it's not just us. Every precinct has this issue. On paper, we have a prescriptive easement in most cases. There's dedicated easement in some as well. A prescriptive easement of 25 feet from the middle of the road both directions, so a 50-foot easement. But the problem we face is a lot of these roads are very narrow, and the tree lines and fence lines have I won't say encroached in it because I don't know that they ever were anywhere else. But we just don't have enough room to build roads to standards that we need to have in the future and have adequate drainage and such. And so it ends up being quite a big project because you're having to work with landowners to move fence lines, clear tree lines, move ditches. You all know exactly the challenges facing that. And so as I've been in office now for a few years, I've more and more see the need to develop a program for that. And maybe something I can implement just in my precinct with my crew, or it might be something that, as we're talking about future uses of the road crew, that we start looking at countywide, if there's a way that we can resource and that problem appropriately to solve it across the county.
Mark, I think you misspoke on the prescriptive right of use. The prescriptive right of use is not 25 feet. Court somewhere years ago said they were going to declare that all our right of way was 50 feet, 25 foot either side, but just them declaring it didn't do it. Correct. It's what's actually there. So my understanding has always been it's either from the top of ditch to top of ditch, back top of ditch to back top of ditch, or fence line to fence line, and that's the prescriptive easement. So we can't go and widen it. If it's only 16 feet over there, we can't take 9 more feet.
You're correct. I did misspeak. Thank you for clarifying that. And that's part of the challenge, is to determine where.
That is the challenge.
Where we have a right to more and where we don't. And in cases where we don't, but we have a road that say is on our thoroughfare plan, is that something where we need to be looking into possibly purchasing additional right-of-way so we can prepare for the feeder roads, arterial roads that are going to be planned for that location in the future. So it gets to be a pretty big issue, which is why I haven't solved it yet. But that's why I have it on this. I think it would be a great thing for us to work together to get our arms around it and have a county-wide approach to that as well. Also, we want to prioritize signage and safety devices. We regularly put up new signage right now. It gets disappeared in a hurry in many cases. But additional to signage, just more safety devices around culverts and bridges. As we have more traffic, we have more people coming in who are driving very fast. They're not as familiar with kind of I would call it a country road environment. And so we need to, and also it's a relatively low cost way for us to improve the quality of our road system. So that's something we want to be focusing on in the future. Other considerations would be workforce development. We want to make, I want to see us in precinct and countywide make Hunt County a value-added workplace. And so that would be something that would perhaps facilitate that, is to have a more of an emphasis and encouragement of certification acquisition and pay scales that would support that and reward that. We have increasing trouble hiring enough CDL drivers. And so if we had a program, a more defined, specified program to bring in people who are hard workers and a great fit for us, but maybe didn't have a CDL, we could help them acquire that. And how to do that in a way that makes sense to the taxpayers, so you're not just becoming a CDL school, requires some thought, but that's something we're looking into as well. And this is something I borrowed from Gary. The next one is the increased shared services between precincts. I think that's something we need to continue thinking about. And again, this road crew conversation is really that item, but it could be expanded as well. And then, and this ties in with the right-of-way issues, we have a need to widen road surfaces any chance we get. There's some where we can do that with the existing right-of-way, somewhere we may need to get some, see if we can acquire some more somehow. And review our subdivision regulations. I think that's something we, as a court, probably need to do on a semi-annual basis or some regular scheduled time frame. And I know we all have conversations with Brian Toole about how things are working and what may not be working. And so at some point we need to, I think, bring that to all of us and sit down and see what we think.
You brought up the CDL thing a while ago. We've talked about it for numerous years. We're gonna get together and find out a way to make it into agreement or policy or whatever you wanna call it, where if we've got employees that wanna go get their CDL, county upfront pays it, and then the employee has to stay, X amount of time to basically pay it back. I know we all still kind of talk about it from time to time, but I want to do that. It'd be nice if we could look into it the following year and see if there's a way for us to make that happen.
Yeah, and then I think,
Have people like you're talking about.
correct.
Certified as a CDL, but it's $2,500 to get your CDL, and they'll have to work a year or 2 years to pay it back.
Yeah, I think that's exactly the sort of thing to pursue. I know other counties have similar programs. Again, 254 counties means 254 different ways of doing things, but I know other counties have similar programs that they've used to success and been pleased with.
We need some copies of their stuff and see how they progress.
Yeah.
It's almost exactly what you just said. We'll pay for you to do this, like on your training in school, but, right? We'll pay for you to get this, and then you have to stay on 12 months after that, 24 months after that, whatever, I think it's that simple.
Well, Terry, I don't know if y'all still do it or not. If you've got a trailer that wants to go to police academy or something like that, where I know law enforcement does it from time to time, that kind of way.
We're attempting now to do that with one person starting out. It already works, but they already had worked for us so many years and all that.
What we've seen in the years past, being at the fire departments, we'd send them like when I was volunteer, we'd send them to rookie school to get certified as a professional firefighter, or we'd send them to get an EMT or a paramedic, and as soon as they get that certification, they're gone. You can have it wrote down in a contract, but really a contract's not worth the paper it's wrote on, because you can sue them to get your money back, but then you got attorney fees and all of that. So really, you got to just trust that the person you're sending
Yeah.
is going to do the right thing for you.
Yeah, and at $2,500, I mean, if we hold a paycheck from them or something like that, at least you get something back out of it.
Yeah. So,
Didn't mean to go off.
No, you're
Yeah,
good.
no
That's-
problem.
We don't have a chance for us
Sorry.
all to talk like
Yeah,
this about
no,
certain
this,
stuff.
that's totally fine, and I'm glad we are. Another, to David's point, and yes, that point is well made and taken. Maybe we don't have the requirements, but maybe we just have a healthy pay boost for employees when they acquire that certification, or a number of other certifications for equipment operation that we could help them to get as well. So something to also put in your head as long as we're on the subject. As we grow and the total crews across the county grow, there's probably an opportunity to have more non-CDL positions as well. So we may be able to meet some of our needs that way. But the need for CDL drivers is not going to go away entirely ever, and probably not even going to be reduced. It's going to continue growing at some rate. So we can offset with other positions, but we're still going to need to hire these drivers, and it's a very competitive hiring market for them, which is good for them.
Just a question, for all of you. Are single axle dump trucks not valuable to y'all? Because you don't have to have a CDL to drive. I think it's a single axle with a certain amount of, I don't know what the other qualifications are, but I know Larry Jackson in his building company, he's got one.
So we
And-
actually-
And it's doesn't require a CDL driver.
So the truck that we just bought, the 550, was with that, so it can dump, but it's single axle, won't require CDL. So yeah, that was the part of the thought process of the one we just picked.
Yeah.
So some of the single axles, like, I know I've got one that's above the 26,000 pounds.
Is that the other qualification, the
Yeah,
pound?
it's the pound
That's the
is
weight.
Whether you have to have a CDL or non-CDL.
And David, I think you purchased a couple that were
yeah,
on
like
the
the
26.
three that I just ordered,
Yeah.
they're all right there at 25.9 or whatever, right under that 26. So I don't have to have a CDL driver for those 3 dump trucks.
So that was a great purchase for you because it allows you to outfit a right-of-way crew, someone who can go install culverts and do a lot of things for you without a CDL. So that's exactly the sort of thing we can do in the future to meet our needs while still being mindful that there would be value potentially to the workforce development, the value-added process and culture. So this is the my requested budget sheet. I've highlighted a couple areas where there were some significant changes. I'll start at the top with employee salary and note. I have a note on the side there. I eliminated a full-time position because I've had trouble hiring, and I don't want to keep that in my budget if I don't reasonably expect to fill it. And so we've got a couple applications. I've got a job posting now if anybody's watching this looking for a CDL driver or equipment operator position. But we have challenge keeping people, and there's a number, hiring new people. There are a number of things that go into that. I expect I won't go into all the details. But one thing I do consistently bump into is just pay. And that's not going to surprise anybody. But if I'm starting guys off in the upper 40s, lower 50s, based on experience, that used to be pretty good salary. But if you bump it up to more the mid upper 50s and lower 60 range, you can get a lot more people, but then you mess up your pay scales pretty badly. So there's some challenges there. I'm not proposing a specific solution to that, but I think I want to mention it because it's something I've run into a couple of times where I've had 3 or 4 guys contact me or even submit an application, get to an interview, and we just couldn't come to agreement on a salary. So eliminating one full-time position and creating a part-time position. I think I'm saying that right. And putting $20,000 in that. In the process of interviewing people, I've discovered, and I think Commissioner Monroe has also discovered this in his precinct. Sometimes you have guys who they don't want to work full-time, but they're happy to come in several hours a day and help, and they might be good candidates to run a mower for you or install some culverts or something like that. So we're going to put that in there so we have the authority to try a part-time position and see how that works for us. The numbers with the X's in the columns, those, I don't really control those numbers, but I did my best to put them in there, input, just so I could get a total number, a ballpark number for the budget. So those may adjust slightly. On rentals, I budgeted $40,000 for rentals. We're hoping to rent a reclaimer for 1 to 2 months this year to go in and rehab some of our old roads, and that's going to run us about $20,000 a month probably to rent that. So for just factor in 1 to 2 months of a rental of a piece of equipment like that. Of course, it wouldn't have to be that one, but
I know you, at this price, I know you're looking at the big one, but don't forget, like I've offered before, I've got my reclaimer too, if anybody ever needs it.
and I appreciate that. So that might be for a reclaimer, or we might use it for something else as well. In the past, the trouble I've had in the past with the smaller type, like the, I apologize, my mind's blanking on the type that you have over there, Steve, is I needed a,
Asphalt zipper.
yeah, I needed a second piece of machinery that's big enough to operate that with, and I didn't have it, but I understand that they've made some changes to that.
They make smaller ones, but again.
Smaller, yeah.
it's Just like I've told you before and anybody else, if anybody wants to use it, I'll send it and my loader over there, and you ain't gotta have anything except bodies to run it.
That's great to hear. I appreciate that. But we'll keep that in there for any other equipment along the way that we may need it in the course of business. As far as equipment repair and maintenance, keeping that pretty much the same for fuel and culvert. Bridge costs, our bridge conditions are pretty good. I've got a couple minor repairs needed. I'll probably need a contractor to do that, but that's more preventative and maintenance repairs than big problems, but we'll get that taken care of. For contract services, I added $100,000 to that, which is more than we've done before. And the reason for that is twofold. One is we are looking at opportunities to utilize contractors for some of our road rehabilitation projects, just because we haven't had enough crew to get everything done we need to do. It also can help us realize some potential long-term cost savings by not having to carry all the salary benefits for the workers necessary to get these things done. Also, we've always, not always, but frequently used the Pug Mill and the company that uses that. And I think it's been coming out of our road material line item, but really the material is is purchased separately, and the actual work and machinery is a different deal. So I'm planning to pay for that out of that contract services line item in the future, just to more accurately capture that cost. So, and that's going to be over 50,000. So half of that would go just to that in this scenario. Of course, this is for next year, and we may change, choose not to use a Pug Mill. We don't use it every year, but this way at least we're prepared to do so. On my road materials, my current budget is $2 million. I'm requesting 2.3 for next year. And on my equipment, I mentioned we do have some trucks that are starting to get at the point where we need to think about replacing them. I purchased one last year, and we'll be looking at purchasing some more in the future. So I would expect, so I've requested $225,000. It's an increase over last year. My original budget was $125,000, but then we decided to get that truck, and so the adjusted current budget is $178,000. So this will give us a little bit more to go out and buy a couple small, dump trucks that are the end of that 26,000 limit, and replace that fleet. So the total request is for $4.389 million, and that is, as I mentioned, that's a 4.5 approximately increase over last year's. This line item, I don't have my full worksheet, but that shows my budget last year for $4,041,000. That is my budgeted expenditures. I have a surplus revenue of about $150,000, so my actual budget is 4.1 something. So when I put this budget together, my plan was to minimize the need for any new tax revenue. So my fund balance is sitting at about 1 million and change. I would expect that the increase in budget, of requested budget, would be funded solely, could be funded solely from the surplus added to my fund balance from this year's budget between the already projected 150,000 surplus revenue and surplus revenue from these salary positions haven't been able to fill. So that will keep us from having to have new amounts of taxpayer dollars is the plan.
Mark, before you can go back?
Sure.
The,
Oops, sorry.
what's the deal with your barn? 22, 23, you spent $127, and then 23, 24, you spent $169. This current year, you budgeted 75, and in your request, you said that it needed to be a contractor come out. You had multiple leaks and had all kind of problems with it, and yet you only spent $126 this year on it, and you just said on your prior slide that it was in good shape. So what changed?
We had wanted to do some improvements or considered some improvements to it, but when it came down to it after getting prices back and looking at the other priorities, we decided that the improvements specifically to build some more covered parking, just so we're not.
What happened to the leaks in your building? Because you said you had multiple leaks. And
We are still working to resolve those, but those can be fixed for the lesser amount we've requested in this. The last year's request was for a covered area for employee parking, and we may still want to do that in the future, but for this year, it didn't make the priority cut. So we decided not to go with that.
Okay.
This is just my year-to-date, most recent report run, just for reference. This is an extension of the items already touched on previously, but we've already talked about the workforce development, so I won't go over that. Talk about shared services, I won't go over that again. But there's a number of potential options there. Gary has mentioned, if enough precincts utilize the Pug Mill regularly, is that something we want to invest in for ourselves? That's a good question to consider. Then, of course, do we want to have a separate mowing crew or expand the current road crew to include mowing? We've talked about that, so I won't cover it again. And same thing for the road surfaces and right-of-way issues we have. So from a 5-year plan, I want to develop the road conditioning system, scoring system, I should say, a rehab program. We're getting to the point where we have been able to repair a lot of roads that were in need of it, and we're able to start putting a lot of these roads on almost a scheduled basis, anticipating repairs in the 5, 7, perhaps 10-year range, depending on them, so we can plan out ahead to anticipate the needs in the future. And then increasing emphasis on maintenance. It's hard sometimes to do everything in a crew and do everything equally well. And so as we resource our crews in the future, we kind of have to have a mindset of what their first priority is. And I think we all agree that maintenance is the first priority. Well, that begs the question of what do we do about a lot of the needed road upgrades. If you were to go back to my slide on the road report, I have about 122 miles of rock roads. That's down from about 150 miles of rock a few years ago, and a lot of them have quite a few residents on them. So improving those rock roads is a high priority to us, but we're limited budgetarily in at the pace that we can do it, and also with the amount of workforce that it takes to do it as well. So how to handle that in the future and balance that with our emphasis on maintaining the roads we have is something we are always looking to improve our plan on as well. I feel like you have to put a quote at the end of a slide. I actually haven't read this quote out of the book directly, but I have it on good authority that it's attributed to Dallas Willard. And so I put up there because whenever I interact with my constituents in the county, And whenever my guys do, and they have this expectation, and they're very good. They support me super well. I'm blessed with the road with the bridge road and bridge crew I have. But we always need to remember and remind ourselves that the budgets we vote on and put in place, priorities we adopt, the way we conduct ourselves reflects something about us and who we are and what we see the county being. And so I like to think back to this and say, what can people count on me to do in any one time? So can they count on me to keep my word, to do the things I say, to maintain the priorities I've set, and allow the principles I espouse to guide me. So that's what we're always doing, or trying to do. We're failing a lot, but we always try to do better the next day. So that's why I close this presentation with that quote. Are there any other questions?
Thank you.
There being none, Brittany's going to hand out also, and it's not a presentation, but we also had the commissioner's office budget. It's pretty small. That's why I didn't do a presentation or anything, but I'm just going to have her hand out what we requested. I guess back when I was the new commissioner, we needed to put somebody kind of in place to supervise that, be default, make sure the budgets were submitted, sign timesheets, that sort of thing. And so new commissioner at the time was selected for that. So I helped put together that budget.
Are you recommending Gary to take over then?
It is kind of a new commissioner tradition, I think. So no major changes are being requested. In fact, we're asking for a couple small reductions in line items that just historical spending hasn't supported the current budget. And Brittany does a good job running things over there and supporting us. So I appreciate the work she does.
Yeah, I have to admit, I asked for paper clips the first day, and she said, "Do you need them?" I mean,
And how many paper clips? We're not just going to give you the whole box, Gary.
You get rations.
Thank y'all for your time.
Thank you. I was trying to be funny there, Gary, but we do need to talk about, we don't have a judge pro tem, or if Mark wants to keep doing what he's doing, and we need to put that on the agenda at some time in the near future. There will be a time I probably will miss, and somebody needs to run the meeting, so.
New guy.
See, foreshadowing.
Jessica, remind me to put that on the agenda in the future. Steve, you said you're waiting.
Yeah.
Anything else?
I'll present mine today.
Sure.
If we can take about a 5-minute recess.
Sure. Go ahead. We'll take a 5-minute recess. I don't have, do we have a recess button on this thing? I guess we are. I don't see one.
We can just do this. Main camera.
Yeah, always. Yeah, I put it back on. Yeah, it was showing just nothing there, and I didn't want it to not have something up there that said recess or something. We might. Probably be nice to have it just for the future. I mean, just a few minute recess or something. Yes, that's great. said. We turned it off, but then it was like we were off. I didn't want it to, we don't have one that says in recess or anything, so he's gonna try to fix one for us. We just don't have it.
You go.
Doing that quite regularly.
We'll be doing that next week.
My problem is waking up and it's
Hmm?
My problem is going to sleep, not waking up.
Yeah. We'll let the sheriff take behind. He's better speaker than I am.
That'd be great.
I got all the cheap notes right here. Hello, hello.
Everybody back? We ready?
Thanks for taking the line.
All right, we're out of recess. David, you want to make your presentation?
Y'all ready?
Sure.
Judge, Commissioners, let's see here if I can work this. I've created this PowerPoint presentation to outline my proposed budget for Precinct 2 for the years 25, 26. And I believe that as we review through it, you'll see that I've thoroughly done my research and I've been responsible in both guarding and utilizing taxpayer money. What I did is just kind of put this year's, the 24-25 budget, current budget that I'm working on.
There it is, you got it.
Sorry, went online.
Okay. What I did is, I've got my current 24-25 budget listed in the left column here. My proposed is here in the middle, and then the variance is on the right. What I've changed, if we start with the employee salary, I had one guy retire in January, a full-time guy. I didn't replace him. I hired a part-time employee to replace him, and now I've hired a second employee. That's why you see that $25,000 increase. My full-time salary line item decreased, and the part-time increased by $25,000. If you go on down to the equipment repair and maintenance, my budget for 24-25 was $160,000. I'm reducing it down for 24, or 25, 26, I'm reducing it down to 125,000. That's for $35,000. And what I did is I just ordered 3 new dump trucks that are gonna be replacing, I have 390 model dump trucks. Those things have wore all the way out, and they're getting to the point we're spending a tremendous amount of money in repairs on those. So I'm thinking just replacing those 3 trucks, and I'm gonna be able to cut that line item at least $35,000. That's where I started at. You go down to auto liability. I increased that line item from $11,438 up to $15,000, and that's because I'm assuming that those 3 trucks are going to cost me more money on insurance. So I went ahead and allowed for that in there. That's why you see that in the red. That's a deficit there where we had to raise that. If you come on down to the uniform expenses, right now I'm budgeting $10,000. I'm cutting that line item down to $7,500. I believe I can get it down closer to $5,000, but I didn't want to shoot myself in the foot being the first year of trying this. And what I did is I'm going to buy the guys' uniforms, and I'm doing away with the uniform service. And that's going to cut my budget in half on that one line item. You go down to operating supplies. My current budget is $12,000. I'm cutting that down to $8,000 for 25, 26, cutting it $4,000. How I'm doing this is when I first came 2.5 years ago, there were different suppliers that came by the barn monthly. We had shelves full of grease and just degreaser, just a bunch of different items. Some of that stuff is still there. We haven't even used it. I cut all that out. I just go buy the grease or whatever I need when I need it. So I know I can cut that by $4,000, that line item there. You get down to expendable tools. I have replaced, we had the big air compressor that runs the barn. It went out on us. I've replaced it. And then I had to replace some other just miscellaneous tools, but we're pretty good on, I don't see that we're gonna need any extra tools. We're outfitted pretty well at the barn right now. So I've cut this line item down from $10,000 going down to $5,000 and saving $5,000 in that line item. On my fuel and lubricant, we're at $180,000 for my 24-25 budget. I'm cutting it down to $125,000 for this next year. I've looked back over the last 3 years, and we haven't spent the full $180,000. I believe I can make the $125,000 budget work. That's taking $55,000 out of my fuel budget. If you take all those variances and add them together, that comes up to $112,938, right at $113,000. I'm putting that money that I'm saving in the other line items into my material line item. My material right now is $2,128,918 for 24-25. With moving that money around for the 24 or 25-26 proposed, it'll be $2,241,856. If you go down, my current budget total for 24-25 budget was $4,170,547. My requested budget for 25-26 is the same, $4,170,547. Any questions on that? Okay, I want to talk a little bit about a few things. First is the growth that the other departments have talked about. I think it's no secret the growth is primarily concentrated in my area, talking about Precinct 2. The growth is primarily concentrated in the Caddo Mills area. From 2020 to 2023, Caddo Mills experienced a growth rate 174.9%. The population for 2024 was projected to be at 6,000 with an expected increase to 15,656 by 2029. That was what they had on the books earlier this year. They've added since then. So that's the projected number that was the beginning of this year. So we know it's going to be more than this, probably. Go ahead.
To add to that, the poll place for voting in Caddo Mills went from 3,000 up to over 9,000 registered voters, which would make that number even, it's bigger than the 6,000 for
That's
sure.
what I'm saying, it's more than this
It's way
number.
more than that if you got 9,000, but 6,000 probably includes people that not old enough to vote and all in it. So that, just that area around the downtown Caddo Mills area has grown tremendously, and we're gonna have to break, that whole area, we're gonna have to create at least 2 new voting precincts here pretty quick.
Well, also in precinct 2, and thank you, Judge. In precinct 2, the areas including Josephine, Roy City, Union Valley, Cache, Poetry, Quinlan, and Greenville are all parts of my precinct. I don't have the whole city of all of them, but at least some of these cities touch my precinct. All of these areas are experiencing ongoing construction and have additional projects on the horizon. Precinct 2 has seen significant growth overall. The volume of traffic has increased dramatically just in the 2.5 years that I've been here, involving not only residential vehicles, but also the increase in the concrete, the lumber, the trash, and the commercial trucks coming through. That's in addition to Interstate 30 traffic, and what I mean by that is they have shut the service roads down to one way, and almost every day we have a wreck on the interstate. So now people, and to avoid those one-ways, even if there's not a wreck, people have found ways to cut through my county roads to get to other places, using it as thoroughfares. So that's even added increased traffic and damage to my road. Just last week, we had to replace 3 5-foot culverts that go under a road. It's because the big trucks are coming through there. There's no truck signs on that road, but they ignore it. So they come through there, it's caved in the culverts. We're seeing that more and more in the precinct. As a result, maintaining the infrastructure is becoming overwhelming. Our team can barely keep up with the maintenance demands, and unfortunately, upgrades at county expense is not even feasible at this time. We're trying to just keep up with maintenance on them. I want to talk about my accomplishments. Like I said, I'm in my 3rd year. I've been here about 2.5 years. And these are some accomplishments. This is not me patting me on the back. This goes to my guys. We've replaced several pieces of worn out equipment, including a loader, a backhoe, a skid steer, a motor grader, and 4 pickups. And additionally, we built 2 dump trucks. Now, when I say we replaced worn out equipment, when I came starting day 1, I'm like, let's go do this, let's go do that project. And the guys are like, well, that tractor don't run. That tractor's running on 3 cylinders. Oh, we don't run that one unless it's absolute emergency. These are things, these were have to replace them. We didn't have a choice if we wanted to keep doing business and make any kind of production at all. So successfully what I did, I've had 3 auctions. I've had one every year since I've been here. We sold off old equipment that was inoperable. Some of it, I wasn't there, but the guys that worked there have told me some of this stuff has sat there for 12, 14 years and hasn't moved. We sold off that equipment, and we put right at $1 million back into my budget by selling off old equipment. And that's how I was able to replace this equipment. We've reopened 9 dirt roads that were previously impassable due to lack of maintenance. These dirt roads were on the books as open roads, and when I was running, there were several people come to me and said, if you get elected, you're going to open these roads back up. We use these roads to go feed our cows. We use these to commute to other places in the county. I said, yeah, if it's a county road, I'm going to get them opened back up. I stood behind my promises that I made to people. We opened 9 roads back up, dirt roads. We went over to County Road 2400. That road was a rock road all the way through there. It used to be. When I came, that was another one people asked me, the first responders and stuff, hey, are you going to open 2400 back up? Because it takes us 20, 30 minutes to go around through Union Valley to get over there to Poetry area. I said, yeah, if it's a county road, we're going to open it back up. So 2400, we went back, we replaced all the culverts in that road. We built it back up to grade, and we resurfaced it with rock because it was still on the books as a rock road, and most of it was mud road. So we went back, we opened this back up, and numerous of times since we got that opened up. That was the first year I was here that we done that. The constables, the fire departments have told me, we go through there and thank you for doing that. Several citizens have said thank you for opening that road up, but I made it priority mostly because for the first responders, it takes off, like I said, 20, 30 minutes getting over into that Poetry area. Go on down here to the next one, all of our rock roads, which we have in Precinct 2. I have 42.5 miles of rock road. 2 of those roads weren't opened up when I came here. They're still on the books as rock road, and most of it was rock road, but it just, no maintenance had been done on it. We went in, we revamped all these roads. We got our dirt roads and our rock roads on a maintenance schedule. If we have one motor grader operator, and that's all he does is work. He maintains the rock roads and the dirt roads. A lot of times, of course, we know the dirt roads, about 6 months out of the year, typically, you can't even work on them because it's mud. But as soon as it's dry enough, he goes back out. We got them on a routine maintenance, and that made our cost of maintenance on them to go down because we're not having to spend as much material on them. This next one here is we've repaired 67 miles of oil road. And that's not resurfacing. What I'm talking about is we went in, when I first came, we started going in and trying to overlay roads. We're like, well, heck, we're not going to get very far doing this. We don't have the money. It takes $100,000 to $125,000 a mile to overlay a mile. Not going to get very far. So we started driving these roads. Actually, I had driven a lot of them when I was running, before I was even elected. But after we got there, we went around and started doing these roads and said, man, how can we stretch this money? We got to noticing a lot of the road, the middle of the road was still good shape, but you're missing the shoulders on both sides, 2-3 foot of material. Or you'll have like a base failure where that's where the base has failed and the road's all caved in and rutted up. So we went in after the first year. We just said, okay, next year we're not going to try to overland the roads. We didn't get very far. So the second year and this year, we went in and we started on the roads, just going in, putting the shoulders back in. We went in and we're calling them level up or base failure repairs. And we're able to cover 67 miles is what we got logged right now. They're not in perfect shape. The problem with them right now is it's just a Band-Aid it's like you got a cut and you put a Band-Aid on it. It's stopping the bleeding for a little bit, but it's not what it needs. We need to go in there now and resurface those roads, add 2 inches of overlay on that. Like I said, that's going to cost me $100,000 to $125,000 a mile to do that. I can't do that in 1 year. What I'm planning to do is if I get the money, I'm going to go in and I got it where I can do 18 to 20 miles a year, resurface and still stay out ahead, continue to do the repair work. So I just want to go in and do 20 miles of repair and then 20 miles of resurface, still maintain my rock roads and my dirt roads. This next piece of the puzzle here, we've replaced, in the 2.5 years I've been here, we've replaced, and we were approximately on this. I just went off of culverts that was here when I got here and then the ones that we bought. We're 125 culverts that we have replaced out, if not more. And a lot of those were big culverts that was underneath the roads that we've had to, just like the ones we had to repair last week that wasn't planned. But we've replaced 125 culverts in the last 2.5 years. That's our accomplishment. That's my guys. Okay, I got a graph here for you, and what this graph is going to show you, the amount of asphalt, the rock, and the pothole repairs is what the material's taken on this. The blue is 2023, the first year I was here. We hauled on asphalt, we hauled 14,339 tons. The second year, 2024, on asphalt, we went to 18,370 tons of asphalt that we put out. This year, at the end of the budget year, what we've got scheduled right now and already got it laid out, we're going to be at 20,964 tons. This is what the counties pay for. This is not counting material that we've done for developers or none of this stuff. This is what Precinct 2 has paid for and what we have hauled. Now you move down to the rock. In 2023, we hauled 6,571 tons. We went down in 2024. We went down to 5,640 tons. This year, with what we've already purchased and what we got on schedule, we're going to be down to $4,776. You say, Dave, how are we going down on the rock? Well, we got our roads rebuilt the first year when we were here. So now all we're doing is maintenance on those roads, so my numbers keep steadily going down. If I wasn't doing base failures, my numbers would even be lower than that on the rock, because we got our rock roads up into shape. We got them on a daily maintenance, and we're not using as much rock. Okay, you go to pothole repairs. The first year we were here, I used 670 tons just doing pothole repair. The next year it went down to 650. This year we're at 514. What I'm doing is, you see the trend is going down on it. It's because we're staying up with the maintenance on this stuff. And we're redoing stuff as we go. And that's how we're saving money in this. And hopefully next year, this pothole repair is even going to go down more. And hopefully the asphalt goes way up. Okay, for future, we still have several culverts that we've got to replace. Guys over in Precinct 2, it's probably all around the county, not just mine, but we know the neglect that's been here for several years. And just like Commissioner Hutchins said, we got a lot of culverts that are pieces of pipe or this old rusted up stuff. We can't afford to go in there and replace all of them, but there's a lot of them that we have to do something with because it's causing damage to our roads. So we don't have a choice. So we're kind of prioritizing things like that, but we still have several culverts that we have to change out. I have 2 bridges. I've actually got more that need repair, but TxDOT sent me a report, and I've got major repair on 2 bridges that have to be completed by 2026. It's a TxDOT bridge. All we're waiting on right now is dry weather to get in and get those repaired. But we got to have those done. Okay, like I said earlier, we've overlaid 67 miles of road that had been repaired. But on those 67 miles, now we need to cover them up to preserve the work that has been completed. Because the fact is, if we don't go get those roads covered up, and like I said, I know we can't cover them all up in 1 year, but we got to have a plan to start getting them covered up. If we don't cover them up, I guarantee you the roads that we done the first 2 years, in another year or so, if we don't get them covered up, they're going to be like they were 3 years ago when I came and when I started on it. We're going backwards if I don't get them covered up. I mean, we're at a point where I don't have a choice but to get them covered up. We're going to continue repairing shoulders and addressing base failures. That's how we're getting the most bang for our buck right now. But like I said, that's putting a Band-Aid on a bleed, on a severe laceration. But it's getting us down the road. Okay, we were talking about mowing earlier. I've got to replace a mowing tractor. I've got 2 over there. Actually, I've just got 2 boom axes. That isn't very efficient at mowing, but the one boom axe, this year alone, I've already spent over $10,000 on that tractor. Guess what? It's needing work again right now. You get to a point where you can't just keep throwing money at this stuff. It doesn't make good sense. So I've got to replace a mowing tractor. At some time, I've got to replace, it ain't going to be this next year, but I've got to start looking and planning to replace a motor grader. My motor grader, I bought a new one the first year because we replaced the 92 model. Guess what year model this one is? It's a 92 model. And it's wore all the way out. But we're making it work. I mean, that's the only choice we have. Okay? And now the big one that everybody knows about is we got to relocate the maintenance barn. We're in the middle of downtown Caddo Mills, and we're working on that. If we ever get this dang TCEQ problem taken care of, then we can move forward. But it is a big safety issue and a hassle getting in and out of this thing because the school is 2 blocks away from it. So our hours are 7 to 3:30. We catch the school traffic morning and evening. And you talk about, I'm not even looking at the aggravation part of it. I'm looking at the safety part of it, getting in and out of that barn with the tractors and the trucks every morning, daily. Well, our storage facility, the next problem we're about to start having is down on off of Interstate 30 by 36. They've made that a one-way. Now we got to go all the way to Buc-ee's and come back down to the deal just to get to that storage yard. We're making it work right now. That's the only choice we have. But the next thing we're about to encounter, they're going to start tearing 36 bridge out. Guess where our yard is? It's right there by 36. They're in the process of shifting everything over on the service road. How are we going to get trucks in and out running 70 mile an hour down the road? I mean, we got a problem. And so I know we all know about this, but I'm just projected future what we got to start planning toward. I sound like a salesman, don't I?
Well, that's what you do.
He's going to tell you what he wants you to buy in a minute.
Yeah.
Yeah. Now comes the part where y'all going to hate me. Y'all all praising me for what I done. But this right here is what I'd like to do, guys. I presented my budget. I left it the same as what it was this year. And if we don't go with this right here, I'll make it work. It's not ideal, and like I said, I think we're going backwards if we don't make it work. But here's what my request is. I've outlined our growth, our accomplishments, and future plans. Precinct 2 contributes approximately 40% of the revenue. And I'm requesting permission to retain 30% of that revenue within Precinct 2 to support our ongoing growth. To break it down, my numbers may be off a little bit, but they're not off too far. The current ad valorem this past year was $14,435,128.
Dave, to clarify, that's ad valorem for the road and bridge departments?
Right.
The totals? Okay.
Right. We split that 4 ways equal. Each precinct gets 25%. That's $3,608,782 is what goes to each precinct. So Precinct 2 contributes an additional 15% to the equation here. I'm taking out $2,165,269 out of Precinct 2 and putting it into the county. I represent Precinct 2, but I work for the whole county. I work for every precinct. So that's why I'm asking to split it. I'm wanting to retain 30%. I'm just asking for a third of it. I'm still want to put 10% into the overall equation. But if we can do that, if I can put 30% instead of 25% in Precinct 2, what that's going to do is that's going to put an additional $721,756 into my material budget. So that's going to put me right at $3 million. What I'm going to do with that $3 million is, like I said earlier, I said I want to try to do 18 to 20 miles a year. Well, if we're talking $100,000 a mile, and that's on the low side, that would be $2 million to do 20 miles. So that's why I said 18 to 20 to allow for a little bit of overage there. So then that still leaves me money to keep repairing my base failures and putting in my shoulders. We've been averaging around $40,000 a mile doing that. Sometimes more, sometimes less. 40 is a good number on that time you buy because you got to buy your rock to replace the base failure, and then you have to buy asphalt to cover it back up. And then that still leaves a little bit of money for me to maintain my rock roads and take care of my potholes. Thank you for your consideration, and any questions or?
So David, when you look at that, at 30%, so you would be picking up 5%?
5%, yes, sir.
Picking up 5%. Are you suggesting that then the remaining 70% divided equal, or do the whole thing it's based on what your percent of the revenue is?
That would be between y'all to hash out. I'm fighting for Precinct 2.
Thought you worked for the whole county.
I do work for the whole county, but I'm fighting for Precinct 2. That's why I'm giving up 10%.
Thank you, David.
Thank y'all. I hope we can all still talk after this.
I'll talk to you.
Oh, we'll
Hurt me.
talk. No.
All right. Anything else?
Are y'all gonna talk about each of these departments, so I know what I'm supposed to put in there? Or do you want me to put them all in there, or how do you want?
You talking about the percentage, the recommended
Well,
percentage?
that, but then like all these individual requests.
We're not, I'll get with you, but we're not, I think I understood everybody's okay with just leaving it where it is with any additional employees or any raises in departments except maybe precinct, the constable too, because they were really taking 2 part-times and making it a full-time, and I really wasn't changing I don't think it was changing their total. Just a hair, wasn't much, so
Yeah, but anything like that, you said you were gonna highlight, so we.
we'll highlight it in our,
Leave it like that.
right, and then the ones that ask for additional positions and/or raises, because I think, what is the DA? DA was asking for 2 position and maybe a raise, I think, I don't remember.
They're wanting 2 positions and then moving the victims out of.
All right, and moving it over out of SB 22, yeah.
The sheriff's office was asking for positions, raises, and then addition to their assignment pay for 6 employees.
That do it?
Yes, he said that.
Were we going
There we
to, so yeah, I get, so I'm with you on that piece, but were we going to try and make a decision today on telling her to plug it in at 1, 2, 3, 4, whatever the percent number is?
That's what I'd asked earlier.
Yeah.
I never got real clarity on it, but
I think we kinda need.
I think we need to make that's the biggest part of the puzzle.
Yeah.
Yeah.
And then like Mark said, and everybody else, if we see that this percentage is too much, then we can come down or adjust it accordingly. But yeah, we need to give her something to kind of go by.
well, that's what I'm saying, because what I was trying to do is when we finally get everything in and get it where we can present it, it'll be kind of the way we are right now with whatever we've added to it or increases in departments and all. And then we can see if it's a 3% raise, then by then we should getting close at least to getting our revenue in. We can still guesstimate at our revenue.
Yeah, have all of our costs lined out.
Cost lined out, and then we get our actual revenue with our tax rate and all, then we'll know how we can maneuver it there towards the end without having to go back and trying to remember to pull things out. I just don't think that works good, personally.
So yes, I'm
So-
3% or what?
Yeah, are we saying, we've all generically used 3%, is that the number we want to tell
We
her
can
to
start with
plug in?
3%. I think that's a good number.
Anybody have heartburn with that?
We can start with it. Again, if we need to adjust it one way or
Yeah,
other, then we
just
can.
the
But-
employees, if you're listening, that's just a guesstimate of where it's at.
Do we have a master spreadsheet or something that, I mean, if we projected it and just changed one number, it would adjust everything? so
Got
we-
2 of them. She's got one and Mary's got one.
All right.
Mine, as soon as I put in, it changed all of them, so, but
Alright.
I did all of those separate for you.
That's what you
So-
got
so,
here.
okay, so once it's built out, we can, if we need to, project it and say, hey, what does 3% look like? What does 2% look like?
Well, the plan is Mary's created a spreadsheet and that's gonna mirror hers, but she can put in, if we decide it needs to be 1% or 4%, she can hit her spreadsheet and tell us what our new total numbers are.
Great. That'd be
But
great.
we'll play that game once we get there.
Okay,
But we just need a starting point.
starting point.
And so I'm thinking the starting point should be, what our budget's being proposed now and a 3% raise across the board. And then we'll and then leave all those people out.
Constable JP too, just the.
Fix that one and leave it alone. But highlight it if you would, or Mary can when it comes in, whichever way it needs to go.
I highlighted in my.
Yeah. That way, so we won't forget. All right.
And do you want to zero out any of the funds that are available? If not, Mary says something about we've got to put the money somewhere else, but.
Well, that's a good point. Commissioners, what she's talking about is, before I got here, there was always the policy that if there was any extra money in a department's salary, it got zeroed out. And we talked about this a little bit earlier because of the problems where if a department loses a high-paid person and then they hire somebody at less money, then they've got some money there budgeted, and then they want to give raises across the board or whatever to their people. I mean, some of them, and we've been carrying it over, but my proposal is just zero out all of it, where nobody has any carryover. Does that make
That would for
sense?
sure eliminate the raises that happen throughout the year if you do it that way.
Right. But then it, you know, it affects y'all the same way, so.
Yeah, my experience has been is that on salaries, you use it in that year, you lose it.
Yeah.
I mean, it's not a carryover kind of item.
Right.
That's just my history.
But the problem is, if you do that, then they're gonna use that.
Yeah.
If you have a policy like that, they're gonna.
Well,
Not
everybody
whenever-
thinks
Not
it-
whenever you and I have a reason and they have to explain why.
Yeah.
So we'll get that done.
Well, they think if it's in their budget, they have budgetary authority to spend it, and yet we have to approve all of their spending. So, Daniel, who controls? If somebody has money in their budget for salaries, and they want to give somebody a raise, it still has to come to us for approval. But we get argued that, no, it's their money, they got budgetary authority to spend it, so they should be able to do
No, my understanding is it has to go back to court.
court. So we still control it. Yeah.
I mean, they certainly have the right to recommend it, and that's their money
Sure.
to use. And as long as, and to any department head's defense, if it's justified what they're doing and it's within their budget, we should approve it.
Well, and in the past, it's been some have done it and could justify, others have just done it because they wanted to do it.
Right.
Well, the justification's always been, we get a cover letter saying they're going from X to Z. There's no explanation.
And right, correct.
justification to
That's
us.
Correct. Sometimes there are, some of them will say that I'm getting a promotion or something, very small percentage.
Yeah.
You're correct. I agree with that.
Is there a limit that I could put? Because, you know, certain departments have a very large amount of available money.
I think it all goes to zero.
I say zero it out.
Everybody,
That's
Yeah.
my opinion.
How's this going to impact new hires? You know, somebody has,
well,
It'll depend on who leaves. If you got a high-paid person leaves, then you got a whole bunch of money.
right.
If a low-end person leaves, then that's what you got. And
Could you fix it by just a policy saying that you can't, like, say I've got a guy that makes $60,000 and I want to hire somebody in at $40,000, that leaves me $20,000 to spread out through my people. Well, theoretically, you want to try to hire another person at $60,000 because you're going to get a better quality person in there. But can we make a policy where you have to use that money to hire somebody? You can't disperse that out through everybody?
yeah, one, I like that, but one problem is like, this person's coming in brand new, well, they want to promote from within, so they want to move do this job, and not y'all, but other departments.
so then they want to give raises across their department and use the money for a beginning person.
Yeah.
But we did get away from everybody getting raises, but.
Yeah.
What if we, you know, because we've had department heads come and say, you know, look, I'm afraid I'm going to lose somebody. I know I got somebody retiring. I really need to give somebody a raise to hold a mid-year or whatever. What if we put a bucket of money that the court controlled and said, and I don't know where we'd put it in the budget, but then if somebody came and said, I have this need, then we'd have some budgeted money to do that with. But it wouldn't be in anybody's budget. It'd be in general government or wherever we'd put it. Does that make any sense? Or I hate not to have money budgeted to give some raises throughout the year.
It does make sense. The problem comes into is the justification for it. And if you had zero money there, then you don't have to worry about a justification.
Well, that's what I'm saying. So that if we put a pot of money there, then they have to come justify why they're doing it. And if they just come in and say, hey, I want to give somebody a raise, we just say, no, you got to justify.
The only thing that I don't disagree, you know, that having a separate bucket of money for salary adjustments, you know, for promotions, whatever, is that when you put it into a rolled up account, first hog to the trough gets fed. And so, and so if you make it owned at the.
There is that, isn't there?
So if you make it owned at the department level, then they have to make sure they're managing promotions and salary adjustments and things like that within their budget. The problem is, some of the departments are so small, it'd be $128. And so
Well,
that-
yeah, and some of them have no money to give raises.
Yeah.
Yeah, like,
Yep,
I know.
yep,
yeah, she didn't need money.
Yet other departments can give raises,
right.
you know.
So there might be a hybrid version there. Certainly the sheriff, would want to own his, and then maybe there's a bucket for everybody that's in your boat. We just need to go see what those dollars would look like to make it work.
Well, how about if everybody thinks about it and let's come back with a plan next time? Or let Gary and somebody figure it out.
I thought we assigned Gary to this job.
However many employees
couple weeks
they
ago.
have is how much they'll have a percentage amount of cash that they would have to be able to give
Yeah.
raises to whoever.
So one way, when you don't have two buckets, we have one today, do you want to make it two buckets? And so we'll go back to that theoretic 3%, right? So 3%, so 2.5, I'm making this up, okay? I'm just giving an example before everybody freaks out. Okay? But 2.5% would actually go to, kind of the COLA, kind of thing, or merit for everybody. And then you maintain a 0.5%, which gets you to 3%. And that 0.5% is what you use for promotions, salary adjustments, retention dollars, those kinds of things. Like, once again, I'm making up numbers, but just saying, within that, that's a way to look at it.
So that's a way to get the money is what you're saying.
Yeah.
I mean, instead of a 3% raise across the board, it'd be 2.5, and the 0.5% would come in that bucket.
Yeah,
Yeah,
and then
got
the
it.
department head has to manage that 0.5% for during the year.
Well,
Or
That-
the court,
that-
however we decide to,
but are you saying it'd be in one bucket, or are we putting that in every department?
you can decide how you want to do that.
Okay.
I mean, I think you make the department heads own it, because then it's not a mad rush to get to the court, and everybody justifies, and you run out of money, and then Sandy has nothing at the end of the year to get money from. So, but you're right, there's a very large budget and there's a very small budget, so we'd have to come up with what the right split is.
But does that get us into, giving the merit raises and somebody suing us because he got a raise, I didn't get one? Because that's what we had talked about
Daniel,
before.
that's,
It depends on what the raise justification is, and that's gonna have to come back to the court every time. But you can sue for anything. I'm not talking into the mic, because I don't wanna say that on the record. But you can sue for anything, that's a relatively easy one to fight.
Well, it comes down to performance review.
Yeah.
If you say somebody's a top performer and you give them 2.8%, and you tell somebody else, hey, you're not quite getting there, so I'm gonna give you 2%, that would be the justification. And but you have to have a criteria of what you're managing them against, and substantiated data for how you measured that performance.
That's
If you
what
do
we got
that-
into, or what I understood, because I asked, I don't like the straight across the board raises. And
Don't
if
either.
you don't have performance to meet or criterias, and then you open yourself up for a lawsuit.
Yeah, but the people have to know what that criteria is
Yeah.
before the review. You have to have a mid-year cycle that tells them you're making it or you're not making it, and then at the end. So everybody would have to agree that we're gonna do that, or we have risk, with,
now you're getting real close to understanding what you need to do with the HR department to help get new rules that you were voluntold. We needed you to do that. That's the biggest, one of the biggest problems we got in HR.
Yeah.
Is how to handle this.
I just don't understand. There's not too many jobs that you can get possible multiple raises in a year, and then also a cost of living raise.
Right.
And you've got some departments that have some money left over from here and there, and you've got other departments that don't have any money. And then that also causes us to get our
Pay scales out of
pay
whack.
scale. I mean, if you've
Yeah.
got a CDO guy making, $50,000 a year that's out in the weather and on call all the time versus somebody that works, wherever it may be, that's in an office all the time making X amount. So that's what causes us to get out of line here. I just don't like the whole throughout the year getting multiple raises or having a chance. Now, if you get a different certification to do a different type of service in your job, that's one thing. But just to give one, then we don't need to be doing a cost of living raise across the board then. So,
Well, there's a place to start.
But I know Commissioner Smith is going to handle it and represent us great.
I'm starting, the list of rookie things is getting pretty long, by the way.
Well, I'd like to add just one thing. When I'm looking at the audit, and this leftover money goes into the budgets, but it looks, when we're passing this budget, that it's for individuals within that department. But it isn't. It's just a pile of money that's sitting in there, and the taxpayers believe it's supporting the current staffing. Then what happens is it goes out. It should have gone back into Fund 10. It should never have stayed in that department. The CPA, I showed him what's happening, and he said, you can no longer continue to do this unless you establish a line item showing that money. It can no longer be hidden in the budget.
That's good to know.
Yeah.
So that kind of means you got to zero it out,
Yeah.
right?
Well, the easiest way is to zero it out.
The easiest way is,
Yeah.
So then if we put it in a bucket somewhere, then we have identified what.
Has to show.
Yeah, that's what I'm saying.
Yeah.
So if we put it somewhere in the budget, they're either general government or whatever. Thank you, Mary.
So do it at a 3%, zero them all out.
Yep.
And we've talked about the problem, but of course, the solution we're trying to drive people towards is to handle the raises and such through the budget process, like we're doing today.
Correct. And, you know, of course, what Volin told Gary I'd like to see him do is we need to relook at our whole personnel manual. And part of it would be to be able to, you know, clearly identify standards of how we will give or can give raises. But, and then on top of that, you know, I've talked about it since I've been up here, you know, our HR department really doesn't do a whole lot of HR functions. They're taking care of our insurance for all our facilities. They're taking care of insurance for our self-insured health insurance plan. And that's it, but they're in the HR department. We need an HR department that can, because so many of our elected officials and department heads maybe don't have any experience at hiring and firing anybody or doing reviews of anybody. And they need a professional with knowledge of how to properly do that so that we are fair to our employees and that we're running it as a business would run it and make sure we get everybody where they need to be in line. And that would take care of a lot of our problems with the pay scales not getting out of whack. And then on top of that, we need another person really just to devote their time pretty much to having training programs set up to get people in to be trained so that they can get better, so that they can get raises. But we don't have anywhere place to put them. And I mean, Sandy's capable of administrating all that, but we got no space. But I think we're shooting ourselves in the foot by not getting that done. I think we'll hurt our employees. I think that'd be very important for our employees.
Get something for Gary to work for us. Got a proposal for us.
Well, one of the things I will be doing, and Brittany, you and I just haven't had a chance to have this conversation yet, so start scheduling meetings with every department head to start asking some questions, inquiring, getting gaps from everybody's perspective. I've certainly got a lot of the gaps here. I think the thing that probably priority, and I'm asking, is the way we do raises and handle all that. We need to have something done by October 1st when we start a new budget that says this is how this would be managed going forward.
That'd be awesome, but I don't know, that's a short period of time. I'm not. Well, he's a miracle worker.
Well, I'll take that as a challenge. We'll see if
Okay.
we can get that piece of it, not the whole thing, but just that piece of it. Can we have an answer that the court can agree on and the department's heads have time to understand?
All right. Anything else? Special sessions next week. I know we got guys out next Friday, maybe. Everybody okay with next Friday? Any?
He is out until Thursday.
Okay.
Not next week, it's the week of the 21st.
20.
So you're here next week?
Next week.
Yes,
No, it's the week of
the
next
21st.
Y'all are here
The
next
week
week?
Steve's gonna be out is the 21st.
The 21st through the 24th.
Oh, so that's the regular court day then?
Yes.
Oh, okay, I thought you were at next week. Okay.
I'm hoping next week.
Oh, okay, well, I was confused. I thought y'all were going next week, so it's the week after that. Well, I still probably give Bernice time to get everything in. I'd prefer to have another special session if we need one at the end, towards the end of the week, Thursday or Friday.
We can't do it Thursday, we have to do it Friday.
Okay, somebody in here? Okay,
Go ahead and set it Friday at 9 o'clock.
right, but we got to get them all in, so, do what?
Go ahead and set it for Friday at 9 o'clock.
Sure.
Is that okay with everybody? Friday, 9 o'clock, yeah.
Okay.
Works for me.
Okay, all right. Anything else? I think I'm gonna talk to Daniel first before, I've thought about it more since I've been sitting up here, and I think he might can answer my question before having to go in executive session about it. We can always do that next week if we need to. That's not a today answer. And we've had a good meeting, good long meeting today. Thank you, all the presenters and court for all our diligence of trying to get this done. So I entertain a motion to adjourn.
So move.
Second.
Got a motion second. All in favor say aye.
Aye.
All opposed? Motion carries. We're adjourned at 11:50.
Did you say